This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. Welcome you on a Tuesday. Nathan Hager says a trending Tuesday. We're looking very trendy out there today, but there's still a buoyancy to the tape. And did I think we'd go from a 28 VIX over a number of angst-ridden days to 17.43?
No.
It's a constructive tape.
It is a constructive tape. We had a strong performance yesterday across the markets, good volume supporting the moves in the marketplace. So we've got some economic data this week as well. So we're trying to just discount what we're seeing coming out of Washington, D.C. and get a sense of where this economy is going.
Lisa Mateo, with a full tantrum yesterday, said do more on equities. That's a 201K. Let's line it up in the A block here. 7, 8, and 9 this morning. Michael Darta in moments.
Boom.
Jim Bianco in the 9 o'clock hour. Cubs, White Sox baseball. Cam Dawson
in studio.
At 8 a.m.
In studio.
I did not know that.
Yes, she'll be here. That'll be great.
They don't tell me that. I mean, you get more information on that than I do. We do say good morning here and good on your commute across the nation on Apple CarPlay and Android Auto as well. Good morning, 99.1 FM. Do you have Signal? I don't know what Signal is.
Apparently that's a thing down in
Lisa,
Washington.
help me. Is Signal like Twitter or
It's like this messaging way to message people. So yeah, I don't use it.
Like
I don't
we can use it or
yes. Yeah, I don't have it. I haven't used it.
The surveillance ignorance meter's off the chart this morning. But big news. Michael Barr will have updates on the news from Washington this morning. From Europe, Virginia Mazanuv joins us as well. Thank you for subscribing to YouTube. It's our new digital technology from the Interactive Broker Studios. The Bloomberg Business Flash, El Mateo.
And we've got little movement in futures this morning. This is after stocks registered one of their best sessions of the year. So right now, S&P futures up about 0.1%, 6 points. We have Dow futures up 7 points, Nasdaq futures up 19 points. The two-year yield, 4.05%, up 1 basis point. The yield on the 10-year, 4.36%, and that's up 2 basis points. We have the Bloomberg Dollar Spot Index down 0.2%. Tesla shares really been on this roller coaster ride. Earlier this morning, they were lower. Right now, they're up about 1.5%. It comes after its European car sales. They fell 40% in February, marking the 10th drop in the past year. Kathy Wood actually remains bullish, expects the stock to hit 2,600 in 5 years. Now, the Wall Street Journal saying Boeing reportedly wants to withdraw its deal with U.S. prosecutors to plead guilty to misleading regulators before 2 deadly 737 MAX crashes. And finally, Shell, they're saying they'll expand LNG sales by 4 to 5% annually until 2030, and that's allowing the company to return more cash to investors through share buybacks. ADRs up nearly 2%. That is your Bloomberg Business Flash. All and Tom.
Lisa, thanks so much. You mentioned Shell.
Yeah.
F1 Racing, all the ads.
Yeah, I know.
Every time you see Ferrari, there's that Shell logo.
Yeah,
I mean, they're paying a fortune for that.
Well, F1's
but that's
big.
Branding.
F1 is big, so they tell me. I mean, all around the world. That's John Farrow.
It's like
everything we know.
Ginormous.
Yeah, exactly.
way bigger.
They were in
here.
China.
They were Shanghai.
Shanghai, okay.
I watched a little bit. They were in Melbourne. I think they take a week off to bring the show. It's like a Brooks and Dunn concert. There's like 14 tractor trailers and ships and that. Joining us now, hugely anticipated, Michael Darta. Why do we want to listen to Darta? I have to, it's the worst time of year for him. Wherever one of his real estate properties, everything's 40 degrees right now. Black flies aren't there yet. Michael Darta is with Roth Capital. And years ago, he came out of the Wisconsin Combine and got a job with one of the rock stars of linking markets into economics, Jude Wanniski. And Darda just penetrated right through with brilliant research notes, melding investment into economics. Michael Darta, wonderful to have you on the show today. I'm looking at Atlanta GDP now. I've got a real GDP guesstimate, negative. Maybe it's a little positive. I got PCE coming in with some kind of disinflation. Are we in the middle of a nominal GDP collapse?
Thanks for having me on, Tom. I don't think nominal GDP is collapsing. I think what we're facing here is a series of adverse supply side shocks that will slow real growth and temporarily raise inflation. And, that is unfavorable because for any nominal growth rate, you want most of it to be real, not inflation. And you can see that embedded in the Fed's forecasts with the SEP last week, where they reduced their expectation for real GDP for the year, but they increased their expectation for inflation.
Yeah, I saw that.
And they reduced the real growth expectation about twice as much as they increased the inflation expectation for the year. So nominal growth expectations didn't collapse, but they have eased implicitly. That's looking for about 4.4% nominal growth. That's certainly, below the 5% rates that we've been seeing recently, consistent with the soft landing, and less of it's going to be real. So it's a bit of a stagflationary flavor there, Tom.
So, Michael, bring it right over to the investment world. Does that mean reduced revenues where I've got operating margins coming in and all of a sudden Sweeney's getting gray hair because earnings are coming in?
Yeah, that's exactly what it means. So slower top line growth and higher costs. And, that is a risk to these very elevated expectations for S&P 500 earnings this year. At the start of the year, analysts were expecting more than 14% earnings growth. Our model that uses high yield debt spreads and the new orders index from the ISM data suggests that, low single digits is more likely. And, unfortunately, you have pretty high valuation still on those lofty expectations. So, we'll see if markets can continue to look through this uncertainty. We've rallied over the last few sessions, but, I think we still might have some volatility ahead.
So it seems like one of the key dates coming up here, Michael, is April 2nd, when we get a clearer picture of some of these tariffs here. Just stepping back and thinking about tariffs, is it a good thing to bring more manufacturing back to the U.S.? Is that a realistic and a meaningful goal of tariffs, do you think?
Well, the administration certainly seems to think so. They want to do it for so-called critical industry. If the U.S. has an emergency or goes to war, they want those critical industries here and able to fire up at a moment's notice. But in economics, everything comes with a trade-off. And so if we're deploying capital and labor into industries that we're less efficient at than they would be in other places, then those same resources can't go into making other export goods. So there is a second and third order drag on efficiency, productivity. So the question is it worth it to give that up? And that's what markets are grappling with now.
So one of the concerns here, the immediate concerns, Michael, of this marketplace is this thoughts of stagflation, where the growth is kind of slowing, inflation's kind of creeping back up, maybe due to some of these tariffs. Who knows? Is stagflation something we should be worried about?
Yeah, it certainly has that flavor, because I think after the election, there was a lot of optimism that whatever happened on trade would be offset by fiscal policy and deregulation. And so far, we don't really know, the deregulation piece is kind of a question mark. Right. The administration's going very hard and fast with the tariffs, a bit of an on again, off again, on again approach. But I think that really challenges some of the assumptions coming into the year, which were that the tariffs were simply a bluff or that would be offset by deregulation and potential tax reform. Very difficult to see any kind of a big easing of fiscal policy considering the constraints, and deregulating crypto, I think, is highly unlikely to offset Smoot-Hawley 2.0.
Torsten Slok, Apollo Global Management, channeling Paul Sweeney, I say, puts out a note moments ago, stagflation risk rising. Michael Darta giving us some good knowledge on that. Good morning, an extended discussion with Michael Darta, Jim Bianco coming up in the 9 o'clock hour. Mr. Darta here on the markets, linking in to our economy. And now, folks, the Darta rabbit hole. Does M1, M2, MO, money supply, monetarism, Michael Darta, does it matter anymore?
Oh, I love that question, Tom. Yeah, I'm one of the few that still watches those indicators, right? And so we had a huge explosion in the monetary aggregates going into the high inflation period in 2021, 22.
Stimulus. Come on. We stimuli, that's
Yeah,
plural.
we did massive,
Stimuli is plural. Okay.
Yeah, so they were good proxies for massive stimulus and a huge ramp in nominal relative to the productive capacity of the economy, which was constrained during the pandemic, right? Productivity basically was frozen for 2 years, and we had double-digit increases in nominal demand on the back of all that stimulus. So that's your inflation story. And in the wake of the Fed tightening, 530 plus basis points, those aggregates slowed very sharply. It turns out, the Fed was able to preside over this once in a lifetime soft landing. So nominal slowed, but it didn't crash.
Yeah.
The supply side of the economy picked up after 2022. That's a critical piece of the soft landing and why the slowdown in those aggregates, I think, did not foreshadow a recession this time. And now we're putting that at risk with supply side disturbances, which are frankly a series of self-inflicted blows.
Michael, we're going to get UMich sentiment data this Friday. A couple of weeks ago, the University of Michigan data really suggested that people are concerned. Their current sentiments are really took a hit here. Inflation expectations moved decidedly higher. When you see soft data like that, does that get your attention?
Yeah, it's, the survey data is really a set of inauspicious recent outcomes with confidence pulling back and inflation expectations shooting up. So that's not really what you want to see, obviously. We're going to get some conference board data today for March, and that data has also been soft, not quite as, weak as the UMich data. But the key question is this soft data a harbinger of much weaker hard data coming down the pike? And we just don't have the answer to that yet. And we won't even this week. We've got some February data coming up on Friday on personal income and consumption and the deflators the Fed watches, but still a little bit stale on some of this hard data. And that's really the risk that markets face. We know the soft data doesn't always translate one for one into hard data, but obviously the risks of the hard data rolling over with this hit to confidence have increased.
I mean, Michael, right now we've cratered on the Standard & Poor's 500. I think we're down 7% or some silly number like that. David Kostin and the crew at Goldman Sachs made a splash with some fancy mathematics that put the regression trend of earnings down to be polite, low single digit. Do you have almost a Darda assumption of a single digit stock market forward, or do you maintain double digit growth with operating leverage?
I think it's going to be really hard to maintain that double digit growth. I mean, if you just do a super basic Tom Keene scatter plot regression on forward PEs and 10-year future returns, coming into the year with the forward PE 22x, typically that's a level where you see very weak, potentially even negative 10-year forward returns. So the higher the valuations, the lower the longer term forward returns are. And, that's a little bit of a different game than the chase that's been on with momentum. And then more broadly, I do think that these disruptions to the supply side eat away at the earnings expectations. And so the high valuations are pricing in good times continuing. And now we're starting to question that, which is, why we've seen more volatility in this pullback, which frankly has been pretty minimal so far. In the S&P 500, even at the lows on the 13th of March, was still above a 20 forward multiple. And, that's still 10, 12% above the 10-year moving average, which, I think is very generous because the 10-year moving average is well above longer term historical averages. So this is a high valuation market still. And I think investors that are going to just jump right back in and chase what was working for most of the last 2 years could be a bit disappointed.
We're hearing more and more potentially about a recession. Michael, is that kind of in your 6 to 12 month forecast at all?
Well, I mean, obviously, Paul, I think that the risks have gone up, relating to the soft data really weakening. If that was not underway, then obviously the risks would be lower. It's sort of a shame because, the Fed has been able to preside over this immaculate disinflation and soft landing that's been underway for the greater part of nearly 2 years now, and that is a very rare historical event against all odds. And we've had a lot of excitement about the AI story. Productivity has been picking up over the last 2 years. I don't think that's really AI, but the reversal of pandemic-oriented distortions. Right. All of that could be put at risk now.
One final question, Michael. We're out of time. Yeah. Critical. Is Nantucket and Martha's Vineyard real estate going to crack?
It's softening. A lot of these super hot markets are softening, but the gains that we're seeing from 2020 through 2022 into 23 were historic. So we do have an affordability problem, and not just in those super hot markets.
May your manse not fall into the Atlantic. Michael Darta, thank you so much with Roth. Greatly appreciated this morning. A terrific brief there, linking in the uncertainty of the time in economics with the uncertainty of the time in the markets. A little bit of green on the tape, the VIX 17.46. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Trump administration is challenging the court order by a federal judge aimed to halt the deportation of Venezuelan migrants to El Salvador. A D.C. Circuit Court of Appeals heard their case Monday. Judge James Boasberg's order was not followed by Trump administration officials, and the hundreds of migrants are at a prison in El Salvador. The Trump administration claimed it was justified deporting the migrants because of gang affiliations and due to a centuries-old law called the Alien Enemies Act. During the hearing, one of the judges on the three-judge panel, Patricia Millett, grilled DOJ Deputy Assistant Attorney General Drew Ensing and said the migrants did not have the right to a due process.
There were plane loads of people. There were no procedures in place to notify people. Nazis got better treatment under the Alien Enemy Act than has happened here, where the proclamation required the promulgation of regulations, and they had hearing boards before people were removed.
The DOJ argued President Trump was exercising core presidential powers. Democrats in Congress are calling for an investigation into why senior Trump administration officials were discussing what appears to be war plans on the commercial messaging app Signal and how a reporter was invited to that chat. Al Jazeera says an Israeli airstrike killed one of its journalists in Gaza Monday. Colleagues told the outlet the deadly strike came without warning. An earlier attack in Gaza today killed another journalist. At the State Department, spokesperson Tammy Bruce blamed Hamas for the deaths.
Every single thing that's happening is a result of Hamas and its choices to drag that region down into a level of suffering that has been excruciating and has caused innumerable deaths.
Meanwhile, the United Nations says it will lessen its presence in the Gaza Strip. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Okay, we're off the NCAA thing. No, we're not. Jason Jordan over at ESPN with a great article. Paul, I'm sure you're up to speed on this. I had no idea. There's a high school team in Florida, Montverde Academy.
Yeah.
Which is where these animals come from. Derek Queen, Asa Newell, Liam McNeely, I believe Connecticut, Robert Wright III, and a guy named Cooper Flagg.
Yeah.
They all come out of the same combine in Florida.
Yeah. There's a handful of schools that are just, around the country that are just places.
If your kid's gifted, this is where they go.
This is where they go. IMG Academy, there's in this Monteverde thing. There's you either stay in your local high school or you go to one of these feeder high schools in your local area, whether it's a Catholic school or whatever, or you go away to one of these schools. Again, I've seen some in Florida and Texas and other places, and that's kind of where you get the visibility, I guess.
It's almost like junior A hockey years ago in Canada.
Yeah, and the kids, but it's a great opportunity for the kids to get visibility, I guess, that they go to all these big tournaments where the coaches can see them and they can kind of show off their skills, and It's just a great place to get visibility for some of these kids that have that means and that opportunity, I guess.
ESPN has Houston over the Purdue Boilermakers. Discuss.
We're
rude.
Exactly, but Houston looks very good. We always root for Purdue for our friend Rachel, but
we have to.
We have to. It's in the contract. It's in the contract. But you've got all the big seats. Not a lot of Cinderella stories here, Tom, this year. So that we don't have that in this year's tournament, and maybe that's a function of all the nil and the portal and all that kind of stuff. I don't know.
Yeah, it's getting to be more big league. Let us go to our Cinderella bracket maker, Michael Barr. Michael, how do you recover here into the Sweet 16?
Well, St. John's, first of all, I'm still hurting about that. I really wanted them to go.
Only two seed that didn't make it. Yeah.
Get in line.
Oh, man. It's like, but, Michigan and Michigan State, I think they're still in it, too.
David Weston from Michigan. Yeah. He's a Michigan man.
Yeah.
David Weston. So we got that going.
Okay, that's our basketball talk for today. We don't have to do this till Thursday. Again, running green on the screen here. Our futures up 4. The VIX under 18, 17.43. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Big gains on Wall Street yesterday, but the chief strategist at UBS warns a consumer slowdown set to put more pressure on stock prices, setting the stage for another 8% slump in the S&P 500. This morning, futures pretty much treading water. We have S&P futures up 3 points, Dow futures up 4 points, Nasdaq futures up 5. The 2-year yield, 4.04%. That's little change. And the yield on the 10-year, 4.36%. That's up 2 basis points. The Bloomberg Dollar Spot Index down 0.2%. Bitcoin down about 0.5% at just over 87,000. Sticking with crypto, shares of Trump Media Technology, they're higher, up 7%. This is on news that the parent company of Truth Social, well, it plans to work with Crypto.com to launch ETFs. And BlackRock launching a Bitcoin exchange-traded product in Europe, its first crypto-linked ETP outside of North America. And in other news this morning, Samsung mourning the loss of its co-CEO, Han Jung-hee, died at the age of 63 after suffering a heart attack. It comes during this business slide, though, that leaders have really called a crisis. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Futures up 3 again. The VIX from that 18-19 level comes in better than good, 17.44. This may not be the conversation of the day, but it is certainly the emotional conversation of the moment. Virginie Mazeneuve is exceptionally qualified at Allianz. She has a fancy title, global CIO, and I guess we'll talk to her about the equity markets. A few years ago, she was with the French Ministry of Foreign Affairs in Beijing, decided to do something about it. She has a degree in Mandarin Chinese from Dauphine in Paris. It's well understood, Paul, that her Mandarin is better than my English.
Okay.
Joining us now, Virginie Mazeneuve on Europe. Virginie, I'm so honored to have you on today. As we look at America and the existential idea from these comments that Jeff Goldberg of the Atlantic got, the uproar here about, war plans and all that. There is a tone of dislike of Europe. How do you perceive that Europe is responding to the real or perceived animosity of the Trump administration?
Well, that's a really, really good question. And you've seen part of what's happened in the market. On one hand, you have uncertainty about policy in the US. On the other hand, you had a market, and we had discussed it on the show a while back, that was selling in Europe at 40% discount to the US. So you are seeing those two factors, redirection of flows into the European market, particularly as Europe seems to be galvanizing itself, coming together, regrouping in the face of the Trump 2.0, if you want context, particularly around defense and the need for military spending, but also tariffs.
Is the culture of austerity ended in Europe?
It's really interesting because what you saw, if you look at the latest PMI numbers that came out last night, actually Europe is showing some improvements. And I think it's the results of cut-in rates that we've seen, right, finally going from 4% to where we are today, as well as some hope of fiscal support and development. Now, of course, what's really important is how will that be executed? Can Europe come together with a plan? Yes. Can Europe execute that plan well? This is where we'll still have to see how that spending, if you want, gets into the real economy.
So how do we think about, Virginie, kind of in Europe in general? I mean, they're kind of being forced to kind of galvanize here to get together in terms of infrastructure, in terms of defense. How do you think that's going to play out for Europe?
I think it will play out positively overall. I think clearly the geopolitical aspect as well as bilateral relationship, America is of course a very, very important partner, are critical. And this is why April 2nd, if you want, is key here. But I think even beyond April 2nd, it's time for Europe to get its act together and invest. And we should not underestimate the amount of small and medium-sized companies in Europe who can benefit from this spending. All this said, you have to remember Germany can spend. It had a very strong fiscal discipline, if you want, while countries like France and Italy really have much less room to maneuver given their debt level. So I think we have to see how the German engine, the locomotive, right, can come and support growth, future growth in Europe, but also understand how Europe's relationship with China evolves. I think that's a very important part. And of course, how Europe manages its relationship with the US.
Given that backdrop, Virginie, on a global scale, where do you see some of the most attractive opportunities in global equities these days?
So I think, you want to be this year, it's all about margins and earnings. Why do I say that? Currency changes, tariff changes, etc. Everything will show up in the net margins that companies have. All this said, I think you want to be really well diversified. People had a huge overweight to the US. I think now you're seeing some of that rebalancing taking place. But also, I would not stay away from other big areas like China and India to really create a full opportunity set. With all the dynamics and all the changes we see around the world, there are opportunities a little bit everywhere. I would just not have very large bets.
Virginia, is Switzerland part of the Allianz purview?
Yes, it is.
Well, that's not a radio answer. See how short she was there? Come on, discuss, Virginia. I mean, Nestle and the rest. I mean, do I want to load up on Switzerland? This is her first time ever doing this.
It's really interesting. So Switzerland has some, of course, as you mentioned, some of the very large companies, but also some of the small and medium-sized companies that have quite good global reach, or at least European reach. Historically, people look at Switzerland as a safe haven, if you want. If you look at the currency, if you look at the market, generally that's what it is. We're finding good companies there. So for me, it's not a top-down decision. For us, it's just part of the European landscape, as is the UK. And interestingly, the latest PMI on the UK were actually quite good, showing some, more activity than people expected. So Switzerland, absolutely shop across all of Europe to find those companies. And I would say there's a special spot for small and medium-sized companies, because the impact of all those programs will, of course, have a larger benefit if small and medium-sized companies can take part as a percentage of their profit or their potential growth.
Virginia, what's the current thinking about China as an opportunity? There was a time there when a lot of folks said this government is just not supportive of a lot of policy, focusing, for example, the technology sector, and almost uninvestable. But that's changed a little bit recently. Yeah. How do you think about China?
Yeah, so as you know, I've looked at China for a very long time, and I see still a lot of opportunity in innovation in China. Now, we've had a very strong rally in tech names in China. So if you look at the Terrific 10 versus the Max 7, actually since early 23, the Terrific 10 have outperformed, which is really interesting because not many people talk about that. I think the current context of forced bifurcations, we're not going to go into the reasons why, right? Technology protection, the race on AI, etc., has forced China to really speed up in terms of technology and AI. And the first time you saw that was really a few years back when Huawei showed a phone that was actually quite good, much better than people expected. The second moment of that is the DeepSeek moment, which I think is bringing the democratization of AI to the globe in a way, right? As opposed, because it's an open model. I think you still see a lot of misperception and I would say concerns or perhaps misestimation of the innovation power of China. Now, the geopolitical risk will stay. But as the second largest economy in the world, there has to be an entente cordiale with the US, if you want. And I believe that people are underweight China, and we should definitely don't neglect China.
That's Virginia Mazenouv ends by going back to the 19th century and the entente cordiale. I can't pronounce it. Virginia Mazenouv, thank you so much with Allianz, particularly those comments on the fabric of Europe, the new lack of austerity in Europe. Paul, I look at this and I think your question on China was just absolutely dead on. And it goes back, frankly, to this thing in the zeitgeist about Jack Ma centered out to the cold frontier, 5, 6, 7 years ago. Yeah. And all of a sudden, is it safe to say he's back?
He seems like he's back a little bit. We've got, I kind of use Alibaba as a proxy for investment opportunities in China and investors' interest in China. And that stock's up 60% year to date, up 90%. Yeah, up 90% over the past 12 months. So people coming back to this, the China opportunity, which we all know. But the question is this government could be supportive of investment.
Lisa Mateo was in the Chinese wall ETF. I was not. Up like a moonshot. Futures up 7. The VIX 17.40. On YouTube, subscribe to Bloomberg Podcast, growing each and every day.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. Well, we've got little movement in futures this morning. This is investors remain cautious about upcoming tariff policies. You have S&P futures up about 6 points, Dow futures up 28, and Nasdaq futures up 16 points. The 2-year yield 4.05%, up 1 basis point. The yield on the 10-year 4.36%, and that's up 2 basis points. To commodities, COMEX gold $3,056 an ounce. We go to oil. Brent crude $73 a barrel. WTI crude $69 a barrel. The Bloomberg Dollar Spot Index down about 0.2%. To earnings we go. KB Home, their shares are falling down about 8%. Posted disappointing first quarter results and cut its fiscal 2025 revenue guidance. We go to Smithfield Foods, up more than 3%. Posted a profit despite lower sales, but it was its first set of quarterly results since returning to the U.S. stock market. And finally, shares of spice maker McCormick, they're off about 3%, a reported fiscal first quarter profit that trailed those expectations. After the close, on to GameStop. That is your Bloomberg Business Flash. Paul and Tom.
The Dow component GameStop. Looking forward to that. Carol and Tim will have it for you. This is really good. We got some precious time here with Sophia Drossos working for Point72 in New York. But, you know, we've got to do this. I mean, it's one of the most fractious marriages out there. Steve Cohen, of course, of Point72, has a modest New York Mets team. You have a Red Sox-Mets marriage? Is that true?
Yes, it's a mixed marriage.
It's a mixed marriage,
to say the least.
Yes,
yes. However, I did adopt the Patriots as my football team because that was that was a deal breaker.
That's good for marriage. Good.
And also, you know, the Michigan connection. So for me, when my husband said I'm a Patriots fan, that's a deal breaker for me. I was like, Tom Brady. I knew him since he was number 10.
How's your husband doing? Soto in a Mets uniform is un-American to me. Is he holding up? I mean, the Mets,
Mets Nation is very welcoming. So when we do go to Citi Field, my husband will wear his Red Sox hat. But Mets Nation, super welcoming.
Very good.
Yes.
Good update there. And of course, we are ready for the baseball season. We're also ready, Sophia Drossos, for an economy. And your research note says it all. I think you used the word uncertainty 47 times. What is the character of our economic and market uncertainty?
Yes. Well, uncertainty is something that we haven't had to deal with until more recently on the policy front. So last year was a year where there was fiscal spending, there was a preemptive Fed easing, it was very positive tailwinds for the market. And we came into this year with the markets, I think, for the first time in a long time, investors were looking at the glass as half full and taking kind of the upside on economic growth. And the policy uncertainty, I think, has permeated that a bit. So we came into the year with a lot of expectations for deregulation and animal spirits, and the sequencing has brought perhaps the more onerous parts of policy up first, with the uncertainty over trade, how it will end up, how will it affect the economy. And, you know, we're still looking at that April 2 deadline and not quite sure exactly how things are going to pan out or if that will be a clearing event.
So one of the issues coming into this year for the markets was the Fed's probably not going to do a whole lot to help these markets. It's going to be earnings driven. So therefore, I need my economy to be strong. How do you think about the economic outlook and how that might be a challenge potentially for the earnings story?
Yes, well, on the earnings front, we are coming off a period of time where corporate margins have been at record highs and earnings have been quite strong. And if we're coming into a period where economic growth is expected to moderate and there is a lot of uncertainty facing corporations with regard to tariffs, their input costs, and the outlook for the U.S. consumer, it seems more likely that we're going to see a moderation in corporate profits. And I think that this first batch of earnings reports at the end of April will be very key for the market directionally.
I look at what you just said, clearing events. Folks, this is a Midwest pedigreed right here. Michigan and Ann Arbor was basically East Chicago. It comes back to 90 and uncertainty. And it almost folds into what Friedrich Hayek would say, which is you've got these clearing events where things clean out. So on April 3rd, you suggest we may have enough clarity to go long?
Unfortunately, I don't think we'll have the clarity on April 3rd. So the issue has been on April 2nd, we are anticipating to get a sense of the blueprint on the reciprocal tariffs. But the commentary from the White House has been that there's likely to be ongoing tariff threats in terms of specific industries and products. So on April 2, we'll know a bit about this reciprocity that will be going on, but we won't know enough about what's going to happen with specific sectors.
Not without giving away the .72 cards, but the basic idea here is with this colossal uncertainty and this is a bit off your remit, but I'm going to ask anyways and be rude. Is cash a preferred asset right now?
Well, I've been looking at things like gold and cash. Yeah. Gold has been performing incredibly well. Yeah. And so in an environment where investors might see some risks, asset allocation theory would suggest trying to increase some of your safer holdings. And there are different views on treasuries and the fiscal trajectory. So investors, I think, have increasingly been looking at things like cash and gold.
Oh, I mean, talk about gold.
Crazy.
Juan Soto, $75 million signing bonus.
Good for him.
765,000 guaranteed. Excuse me, I'm off. 765 million guaranteed, and he's underpaid at 51 million a year.
Sure. Good for
He's
him.
got a base of 46 large.
Guy can hit. I mean, you.
He's great. He's like the second coming of Wade Boggs.
Seriously, we'll head out
with a little more power.
City Field, no question.
It's great.
Sophia, what are we doing?
If we talk enough about the Mets, can we get box?
We'll get the box seats. So we'll go.
One more question. Get it in there.
Quick, fixed income. Do I take credit risk or not? Here, do you think?
So it's an environment where I think we have started to see a little bit of a pickup. I think in the delinquencies and the like, but the types of credits that are in public markets are typically relatively strong. I think the bigger question is what's going to happen with the outlook for the economy and what does that mean for all U.S.-based risk assets?
When you go to Fenway, just gaze out at the Ted Williams Red Sea. Make me happy. Sophia Drossos, thank you so much. With Point72, just fabulous over the years with a wonderful synthesis of economics and the impact on our investment. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Trump administration refused to provide flight data to a federal judge about the deportation of alleged Venezuelan gang members to El Salvador, citing state secrets. The case may head to the U.S. Supreme Court due to a rift between the judiciary and executive branch over the extent of Trump's power to invoke a 1798 wartime law to remove gang members. Yesterday, the U.S. Court of Appeals heard arguments after the White House asked the three-judge panel to step in. Judge Patricia Millett demanded to know why the Venezuelans were deported without due process.
People weren't given notice. They weren't told where they were going. And they were given... Those people on those planes on that Saturday had no opportunity to file habeas or any type of action to challenge the removal under the AEA. And you've agreed that 2 of those airplanes, people were removed under the AEA.
Judge Millett says Nazis were given hearing boards while members on the plane received no such rights. White House border czar Tom Homan called that ridiculous.
What we did on those planes, we removed terrorists. MS-13 and TDA were our designated terrorist organization. We removed terrorists. And to compare that any way whatsoever with Nazis is disgusting on every level.
Border czar Tom Homan. Democrats in Congress are calling for an investigation into why senior Trump administration officials were discussing what appears to be war plans on the commercial messaging app Signal and how a reporter was invited to that chat. Senior foreign officials and major tech companies are pushing the Trump administration to rethink the country's global semiconductor strategy as the U.S. prepares a controversial framework for controlling artificial intelligence development around the world. The so-called AI diffusion rule restricts the number of AI processors that can be exported to most nations. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, your question on fixed income to to Sophia Drossos, I thought was really apt. I mean, again, yields up today.
Sure. I'm looking at the 10-year Treasury here, Tom. We're up another 2.5 basis points, 4.35%. The 2 years at 4.04%. We were below 4% just a few days ago. So a little bit of lift in the rates.
199 on the 10-year real yield. I'm going to round that up. It's just back to 2%.
Sure.
Which is, that normalization. And now I got a little bit of green on the screen. Watch the VIX carefully. A 16 print. We're not there yet. That would be unbelievable. Out on YouTube, subscribe to Bloomberg Podcast, the best way to get us worldwide. It's Bloomberg Surveillance.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
The newspapers this morning, just too much. What can we say here? It goes on and on. What's going to be a 25-minute block, but we'll do it right now too quick. Lisa Mateo, what do you have?
We have the condensed version for you. Okay, we've been talking about retailers, right? Bulking up their inventories to get ahead of President Trump's tariffs. So imagine companies like my beloved Costco, yes, Williams-Sonoma, they are stockpiling goods. But here's the difference. The Wall Street Journal talked to a couple experts, and they're saying, you know what, this is risky because consumer spending has slowed. And now you risk getting stuck with a ton of goods that are just stocking up in inventory. The ports in Los Angeles, Long Beach, California, they're starting to see the influx already from this. But the thing is, it's not just the tariffs. They were already stocking up on the merchandise because you had them, worrying about the strike at the ports.
Okay.
Yes, and they were also worried about, trying to get ahead of the Lunar New Year before the factories close across Asia for like 2 weeks. So it's this continuing stockpile of goods.
But again, it's the uncertainty to April 2nd. I mean, that's all this comes down to.
Correct.
That Sophia was talking about.
So the inventory risk. Okay, so if they get
so they're saying, it's not the best idea. That they're taking a risk when they're doing this. But I couldn't imagine stockpiling Costco goods. That's a lot of stockpile.
Exactly. We're going to put
what is eggs? Is the egg thing solved?
Oh, let me get the egg
the prices are starting to go down. So that is the good news. So. Yeah.
I paid $12. Everything was gone.
Yeah.
Sold out, except for the $12 eggs.
I'll give you the update. I'm heading to Costco this weekend.
Here we go. So I'm doing the USDA large eggs prices paid to producers Midwest. So we've had a big pullback here.
Do you do this at home?
I've got it here.
Do you look this up on your Bloomberg terminal?
It's down 55% just in the last month. So we're down.
You have a can of Budweiser in your hand. You're on the deck watching the Dolphins.
Got everything.
And you got a terminal on the deck. It's waterproof. Next.
Okay. Not sure what everyone at home with their high schoolers are doing for spring break. My daughter is playing softball. That's how she's spending her spring break. But last week, hundreds of wealthy New York City high schoolers, a dozen private elite schools, they had their annual retreat. And their annual retreat is Paradise Island in the Bahamas.
Get out.
Yes. The luxury Atlantis resort. Yes,
really?
I've been there once. It's amazing.
Does look pretty cool.
Gambling, drinking age is 18 also.
Good to know.
But they dine at, they have Nobu restaurant, $34 sashimi, $65 lobster salad. They get these networking opportunities, right? And the parents are dishing out nearly $3,000 for 5 days.
A networking opportunity?
Networking opportunity because of the alumni who went to the school. They get to intermingle with them.
This came up at the dining room table last night.
I did not know this existed.
Do you know what my punishment is because we're not doing this? We had to get our hair rainbowed. You don't get your hair dyed anymore. You get it rainbowed.
Rainbowed? Do you do the nose ring too?
I don't know. I wasn't allowed to see what it cost. Next.
It's a lot. It's a lot. Yeah. So, so we'll stick with luxury here. We go to more airlines. We talked about Air France last week, beefing up their new first-class suite, Le Premier. Nice. So now we have British Airlines joining in. The Financial Times say they're trying to regain the status, so they want to put in more than $7 billion. They're investing in this program, so they have this commitment to luxury now. First-class passengers. They have this suite that they can go to, more than 6-foot-long bed. They can
that's
enjoy
for Tom Keene right there.
6-foot-long bed.
Yeah.
You can certainly fit in that one. Stretch out, enjoy the trip from New York to London. How does that sound?
It's a short trip, though. The thing I don't get.
If you got the wind behind you, it's
I can get, you're rolling to Singapore or whatever.
Yeah.
It's 5 hours if the wind's right.
Yeah. It's like going to California.
It's it feels like. I mean, do you want to spend that kind of money? The La Premiere to Paris is, I'm sorry, it's 10, 11, 12 grand round trip. That's a lot of that. You get an extra hour to Paris.
Okay.
Yeah. It's not like going, it's not like going New York to, Pittsburgh.
I can get to Dublin faster than I can get to a lot of places.
Exactly. Like Aer Lingus is like you're popping over there. You're there.
They love me over there.
Okay.
All right, good
Lisa
stuff.
Mateo, thank you so much. On the newspapers. We'll see you in the Bahamas. This is wonderful. It's the Everly Brothers, and she did what you can't do. She made a cover bigger than the original. Ronstadt.
Every
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, and Lisa Mateo. Fear of missing out.
Yep.
Michael Darta, the 7 o'clock hour. Yeah. Jim Bianco, the 9 o'clock. Nobody cares. Cam Dawson with us here in a moment here.
Studio.
Talk equity markets and this original uncertainty that we've got out there. We'll get to Ms. Dawson here in a moment at NewEdge. Well, Paul, I'm sorry, you're lifting the market up. Futures up 14.
Yeah, we had that big move yesterday in the marketplace. Futures were mixed earlier, but now we're decidedly in the green, all up about 0.1%. So we'll see how it shakes out through the day. We'll see how the Twitterverse kind of shakes out as well.
Triple leverage all cash has been killing it.
Oh, yeah.
I mean, the beta, the alpha, the gamma of it has been just superb.
You sleep like a baby. No
odd
problem.
lots, you think do like an odd lot into
They could do
Apple
that.
or, Mag 7?
They
Is
could do
Tesla still a Mag 7?
I think we had a little bit of a pop yesterday, that's for sure.
Big pop.
Yeah.
We'll have to see. Dollar mixed here today. I'm watching carefully. You got yen back out over 150, 150.13 on Japanese yen is a weaker yen. That's odd. And euro pulls back from the 109 level, 108.19 this morning. So we'll have to see on that. From the Interactive Broker Studios of Bloomberg Business Flash, Lisa Mateo.
And we've got little movement in futures. This is after stocks register one of their best sessions of the year. We go to S&P futures, up about 0.2%, 13 points. Dow futures up 0.1%, 76 points. Nasdaq futures up 0.1% or 37 points. The 2-year yield, 4.05%, up 1 basis point. The yield on the 10-year, 4.36%. That's up 2 basis points. We have the Bloomberg Dollar Spot Index down about 0.1%. Few companies making news this morning. We'll start with DeepSeek. It's released some updates to its V3 model, promises to deliver better programming capabilities. And then Alibaba's Joe Tsai, he warns of a potential bubble in data center construction. He's arguing that the build-out pace just may outstrip initial demand for AI services. He pointed to U.S. spending in particular, yes, and your roommate. And Bloomberg Business Week reporting Google stuck in a bit of a situation. On one hand, it's reshaping the search engine around AI to compete against the likes of ChatGPT. But then on the other hand, it's also risking upending the company's core business of mixing links with targeted ads. It's a bit of a conundrum. You got to check that article out on the terminal. That is a Bloomberg Business Flash. Paul and Tom.
Joe Tsai, did you guys have a Bloomberg in your dorm room?
We did not, but we had a good stereo. I had the good stereo.
The stereo. The tunes are really important.
Exactly.
I'm afraid to ask. Did you have the Marantz or the KLH?
I don't know. We had a lot of Grateful Dead. I introduced Joe Tsai to the Grateful Dead and All-American music. Didn't speak a lick of English when he came over in September of 1978. By Thanksgiving, completely fluent.
Joining us right now, folks, it's like I'm chopped liver. I mean, it's all there is to it. It's Paul Sweeney and Tom Keene, and we are after her conversation with the legend Kenny Polcari over at the New York Stock Exchange. That's trader talk.
That was yesterday.
Okay, what do you say to Ken Polcari that you don't say to me? I mean, that's like in and out of the market, right?
Yeah, look, it is a good reminder that there's all these short-term movements in markets that are driving the volatility that we're experiencing, but you have to keep the long-term in mind, which is why we've been continuously saying to clients, it's not where the S&P 500 ends at the end of this year. It's what you do with the volatility along the way.
Are traders getting slammed as a general statement? I mean, trying to game this market right now? Is anybody making money?
Well, we've certainly seen traders move from being max long equities at the beginning of this year, 98th percentile kind of positioning, to that's now fallen to the 26th percentile.
Wow,
so
really?
There's probably been some pain along the way.
Polcari looks like out of Central Casting, Game of Thrones or Outlander or one of those things. I mean, is he retired?
No, he's trucking.
He's trucking. Okay. Good morning to Ken Polcari and everybody down at the New York Stock
Salomon
Exchange.
Brothers guy back in the day. Your note is the end of U.S. exceptionalism. Is it the end of U.S. exceptionalism, or do we still have room to grow? What do you think?
So what we wrote about is this idea is that it's very easy to ascribe a narrative to price action. Everybody looks at the weakness in the U.S. dollar year to date. They look at the outperformance of Europe versus the rest of the U.S. and they say it must be the end of U.S. exceptionalism. But if you look, it really is a function of the fact that we started the year with a massive, very, very crowded dollar long position. That has since been unwound. Traders are now slightly short the dollar.
Is that right?
And we actually think that you could see some dollar stability here now that you've burned off all of that crowded positioning.
Interesting. So what do we, I mean, when you talk to your clients here, again, we had that peak to trough drawdown in the S&P 500 of about 10%. Do they view that as a healthy pullback in an otherwise positive market, or is it something else?
We'd hope that we've talked to clients enough and set up the potential for volatility that there is a degree of calm when we see it. We often talk that volatility is a feature of being an equity investor and that we should see it as opportunity. Now, we think the other reason why there's been this calm is that if you look at a 70-30 portfolio for ACWI, so that's an international balanced portfolio, including the U.S. and the ag, you're still up on the year. So yes, we've seen the U.S. stock market pull in, but at the end of the day, it's not been cataclysmic.
Are we getting used to, I asked Michael Darta, I alluded to this with Michael Darta, more directly with Cam Dawson. Are we needing to slot in the understanding that equities are a single-digit return in our double-digit return addiction?
Yeah, I think that that's very, very likely, is that we've been in this world of very strong double-digit returns the last 2 years. Investors got conditioned to expecting that, which is why you saw these estimates for 7,000 plus in the S&P 500. That's very hard to do when you start the year at 22.6 times forward earnings. You start the year at the 90th percentile of positioning. So our best case scenario for 2025 is that you get growth, upside that's equivalent to earnings growth. Okay. But that assumes that multiples stay constant. And we're not sure if you get multiples staying constant in a world where you're cutting earnings estimates and there's some risk off flavor.
How about Europe? Europe's had a heck of a start to the year here. And that story we had heard kind of last year where European and international money coming into the U.S. market had a little bit of a reversal of that. How do you think about the performance of European equities?
We do think that the easy part is over for European equities. You started at 13.5 times forward. Now you're trading at 15 times. Okay. 15 times doesn't seem like a lot when you compare it to the 20 times in the U.S., but it is the high of the valuation range and the pre-pandemic range for Europe. So it really comes down to earnings delivering. Quite interestingly, earnings for Europe have continuously been getting cut, even as we've been seeing this rally. So it's a show me story.
Right now, the show me story is Cameron Dawson with us this morning with NewEdge Wealth. We welcome all of you in your commute across the nation. Good morning, 92.9 FM in Boston, 99.1 FM in Washington, Bloomberg 1130 in New York. An ample conversation with Cam Dawson on YouTube. Subscribe to Bloomberg Podcasts. Even Cam Dawson subscribes. It's just
tech savvy.
Put us up to 42 is amazing.
Exactly. You know, I'm looking at the relative strength index, the RSI on the Bloomberg terminal for the S&P 500. Man, we kind of bottomed back just like 10 days ago, but now we're moving higher here. I mean, how do these technicals feel? It feels like, is the sell-off, are we done with the sell-off here, or how do you think about it?
So we certainly got oversold enough to bounce, which is why we think we're bouncing today and yesterday. What the question is, what happens when you hit resistance? And are you having enough momentum to break through that wall of resistance, which we think is around the 5,900, 6,000 level? That's your downward sloping 50-day moving average. You've been losing momentum in this market really for the last 9 months. If you look at things like a weekly MACD. So we do think that this is an environment that you could roll at resistance.
I'm going to go right there because I hate it. I'm not a MACD fan, folks. We won't go into the nuances of it. 1600 Pennsylvania is not looking at the weekly MACD.
No.
I mean, they're not. The bottom line is we can't lift until we get political clarity, right?
Exactly. Why would we trade back up to all-time highs when we've cut earnings estimates since, and we have valuations that would have to go to new highs to get there, which is why we think this year at best is that wide, choppy range because of the degree of uncertainty and because of the potential downsides to growth.
It's depressing. Mag 7, are they still the Mag 7, even ex-Tesla?
We've been raising the question if they're more like the lagged 7. We talked, I think, last week.
Do you see a lessening of their cash flow, free cash flow?
It is happening because of the big uptick within CapEx. You are seeing free cash flow margins come in. Now, these free cash flow margins are still so much better than you can get in the rest of the market.
Exactly.
Yep.
So do they become a safe haven when people have questions about growth other places? Very possibly. The valuations aren't as stretched as they are, but the market cares about second derivatives. The market cares about the slowdown in earnings growth, which is inevitable when they had such massive earnings growth over the past 2 years.
But you said the free cash flow will sustain even if earnings come down.
But it is.
I mean, Zuckerberg's going to manage the P&L statement, right?
And they're sitting on massive, huge cash balances as well that they could deploy to repurchase shares.
So are they the new Dominion Electric? You're too young to know that. Could you get me someone in here older that actually knows what D is? Are they the new utility?
That is an interesting question. If they become such monopolized businesses that they are effective utilities, then it raises the question of, do they get regulated like utilities do? And do we see those free cash flow margins compress over time because of the fact that they act like utilities?
I mean, Paul, you're the only one extant in this building that knows what Florida Power and Light is.
Well, Dominion Energy, based in Richmond, Virginia, home of the
It
Richmond
was.
Spiders.
Look at that dividend growth.
Exactly. Earnings are important for this market because I'm not sure the Fed's going to give us a whole lot this year. Maybe one, maybe two rate cuts. So that puts even more pressure on earnings story. And you mentioned that earnings estimates have been coming down. How risky are the numbers that are out there, do you think?
So we think the biggest risk is possibly within financials. So you've been seeing every sector get cut. Financials have seen less earnings revisions lower, but think about the setup for financials coming out of the election. People said a steeper yield curve, we're getting M&A, we're getting IPOs, we're getting deregulation. We've gotten none of that. So we do wonder if that's an area of risk going into first quarter earnings.
Okay, Shanghai, China. Good morning, good evening, I should say. Shanghai, China this morning, listening in. Is China the opportunity Sophia Drossos and Mike Darta were talking about?
Well, China certainly has that valuation opportunity where it still trades at such a huge discount to the U.S. It's underloved. It's been called uninvestable.
So are you going back to a textbook 8, 9, 12, 10% allocation to international?
So we are neutral international. We said you just can't ignore the degree of outperformance in the U.S., underperformance in international, but we don't see signs yet that justifies going to an overweight position.
What are we doing in fixed income here? My 2-year treasury is now back above 4%. Do I stay there? Do I take some credit risk? Where do I go?
So we don't think, again, that you're getting compensated for mostly high yield credit risk. So we moved to reduce some positioning within high yield just to say, let's ride out some of the equity volatility, but we want to be able to take some risk out of portfolios in the event that these growth fears do come to pass.
So in the equity space, what screens well for you guys these days?
So we are finding lots of opportunities within international markets, but very selectively in that the big, beautiful quality world. We're finding opportunities within mid caps as well, and then value, lots of opportunities where you still see areas of the market that trade at discounts, that have good free cash flows, have good balance sheets, and it's just maintaining that valuation discipline, which we think is absolutely critical at this point.
What's the key attribute of those opportunities?
The key attribute is that they are not trading at stretched valuations, and they have stable earnings through cycles, and they have good free cash flow that is potentially seeing better free cash flow margins. So it's about being very picky. We think that there's a big divergence between the winners and the losers in this kind of environment.
This guy in Shanghai, it's child abuse. He's got his 4-year-olds. Watching it. Look at that in Shanghai. Can you see that, folks?
Yeah.
That's cruel and unusual punishment.
Watching surveillance in the morning.
Full disclosure, folks, it's my grandchildren. We say good morning to the Rugrats in Shanghai this morning. But, getting back to international and Pacific Rim, I got too much gloom out there. I got guest after guest read me the Uncertainty Act. It clears at some point. How do you prepare for the moment where the uncertainty drifts away?
Well, I don't think that you can wait for necessarily confirmation from the data. The important things is that price will lead the data. And so as we're starting to see some of these turns and trends, we have to be there, which is why we moved to a neutral position within international about a year ago, saying it's going to happen, maybe this time.
So is our Federal Reserve going to help us this year, or are you still kind of
That's
saying
that's the key question.
A couple of cuts here?
All this talk, folks, Sweeney just asked the money question.
We're not counting on the Fed for anything. We don't think that the labor market is going to be weak enough to justify them cutting. We don't think that inflation is going to move down fast enough to give them the degrees of freedom to cut, which means that you get used to these higher for longer rates. And that's why we think that you have this continuous pressure on weak balance sheet companies that you should fade any strength.
So what's your money unemployment rate?
So we don't think that the Fed will cut unless we see mid fours on the unemployment rate.
4.5, 4.6.
4.4, 4.5.
Really? Wow. Come on, it's not that far away.
It's not that far away, but we don't see this sharp deterioration in the labor market happening at this point. Yes, we see the sentiment around labor deteriorating, but we've not seen companies move to full force layoffs that just suggest that there still is that underlying stability. For now.
Yeah. So, I mean, it's interesting. I mean, one of the questions is, I think for a lot of people is, do I take this pullback to buy stocks here? Or is there just more uncertainty out there because it's just one tweet away from another pullback in the market?
If you're buying stocks because you think it's going to be a V-shaped recovery and it's up and to the right with low volatility, it's the wrong move. But if you're buying stocks to say, I'm going to own this for a long time, I'll step into volatility, we think you can still buy weakness.
All of China's listening this morning to Cam Dawson. The entire nation just went to cash. Cam Dawson, thank you so much. NewEdge Wealth this morning. Futures up 13. Sweeney driving the market higher. The VIX 17.24. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, the Trump administration has invoked a state secrets privilege and refused to give a federal judge any additional information about the deportation of Venezuelan migrants to El Salvador. The case has become a flashpoint amid escalating tension with the federal courts. The declaration comes as U.S. District Judge James Boasberg weighs whether the government defied his order to turn around planes carrying migrants after he blocked deportations of people alleged to be gang members without due process. U.S. negotiators are working with Russian representatives on a proposed partial ceasefire in Ukraine. Monday's meeting in Riyadh came a day after the U.S. held separate talks with the Ukrainian team. During the talks, Russia launched a series of strikes in Ukraine. At the State Department, spokesperson Tammy Bruce said progress is being made on both sides.
Until there is a ceasefire, a full ceasefire, that's when, as the president has noted, and certainly the secretary, that until there's a ceasefire, that's when we can then discuss the differences in what proceeds after that when it comes to an enduring peace.
State Department spokesperson Tammy Bruce. The United Nations says it will lessen its presence in the Gaza Strip. The move following an Israeli tank strike that hit one of its compounds last week, killing one staffer from Bulgaria and wounding 5 other employees. United Nations spokesperson Stefan Dujarric.
The Secretary General has taken the difficult decision to reduce the United Nations footprint in Gaza, even as humanitarian needs soar and our concern over the protection of civilians intensifies.
Meanwhile, Al Jazeera says an Israeli airstrike killed one of its journalists in Gaza Monday. Dry, windy conditions again raising the risk of wildfires in western parts of North Carolina. The Black Cove Complex fire, along with 2 other major fires put together, have burned more than 5,700 acres south and east of Asheville. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Okay, the movie all ends $270 million. You know they're lying. It's got to top $300 million with all the lunches and add-ons as well. CNN has the headline, Snow White box office more sleepy than happy. I mean, Paul brought in $50 million. I guess it'll have Disney legs. How do you book a loss like that? Do you hide it?
No, I mean, it's just, and nobody, investors don't care. That could have.
What do you mean
they could have opened
care?
at $1 billion and the stock wouldn't have moved. You never ever get paid for box office. So why are you in the movie business? You're in the movie business to sell it in, just forever into various different. You put it on your different venues. You put it into your cable networks. You send it to sell it in syndication. You put it, on your streamers. It's just content to have going forward. But the stock rarely ever
trades off a movie.
Trades off a movie.
So like if Titanic comes out and it's ginormous, or Let It Go, Frozen.
The greatest example was Avatar. Avatar came out of nowhere for Fox, and when Fox was a much smaller company, and the expectations was for like 50 million opening weekend. It opened at like 300 million, and it went on to be the first $1 billion movie. Stock didn't move an inch.
Lisa could play Snow White. Lisa could pull off Snow White better than Rachel.
So it's got to.
Has the Mateo house seen Snow White?
No, there's a lot of controversy behind it, though,
Huge.
too. And I think that's some of the reasoning behind it, because you have the doors were actually animated, and so then now you have the little people community.
Yeah,
I don't know the proper terminology.
I don't know what it is.
I did a whole Game of Thrones thing one
Yeah.
night, and Peter Dinklage was a complete class act. He was really
he's
outstanding.
amazing.
And he's been heated about it.
Yes,
That just as you say, they did animated dwarves.
Animated dwarves.
He's like, are you kidding me? Welcome to the real world that Peter Dinklage owns with this incredible acting. And there's like 6 other controversies as well.
Sure.
Has anybody in the control room seen Snow White?
No.
No?
That's a big no.
Our global we're doing great here.
But the price of eggs are down, so he's happy.
We're going to run out of time. What's it do the second weekend?
It'll do about 50% of what it did the first weekend.
Okay,
but it needs legs, as they say.
Okay. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. We've got big gains on Wall Street yesterday. The chief strategist, UBS, warning a consumer slowdown, though, set to put more pressure on stock prices. Yeah, setting the stage for another 8% slump in the S&P 500. So we look at futures this morning, pretty much treading water. We have S&P futures up about 0.2%, 13 points. Dow futures up 0.1%. Same for Nasdaq futures. We go to the yield space. The 2-year yield, 4.05%, up 1 basis point. The yield on the 10-year, 4.36%, up 2 basis points. We have the Bloomberg Dollar Spot Index down about 0.2%. We go to Bitcoin, down nearly 1% at just over 87,000. Now we'll stick with crypto, go to Trump Media and Technology, because they plan to work with Crypto.com to launch ETFs, and that has shares higher. They're up about 10%. And BlackRock launching a Bitcoin exchange-traded product in Europe, its first crypto-linked ETP outside of North America. And finally, Tesla's European car sales, well, they plummeted 40% in February, marking the 10th drop in the past year. But shares regained those earlier losses. They're up about 1%. Kathy Wood remains bullish, expects the stock to hit $2,600 in 5 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Tom.
Hey, Lisa Mateo, thanks so much. Paul Sweeney and Tom Keene to get to the economic data a bit here at 8:30, and then much more with Paul Sweeney and Alex Steele later on. We'll look at that here in a moment. Right now, with a really brilliant note, this is what you get after decades of fixed income. Scott Diaggio joins us now, Alliance Bernstein. I don't even know where to begin with your note. It's so intelligently written, but the basic idea here is price up, yield down. Is that because over 1 year, 2 years, 3 years, inflation diminishes? Is it just as simple as that?
I think it's as simple as that, Tom. And good morning. Thanks for having me. When we look at the economy, we take the view that the consumer is going to slow. We start to get earnings reports from Delta, Target, talking about a slower consumer, a bit tapped out. We start to see plenty of trade tensions right in the world. This should all get growth lower. That should help bring inflation down, and that's a good environment for bonds.
Scale out a 10-year full faith in credit. I mean, I don't need a single point call 3 years out, but give us the scale there on a quarter point basis of where the 10-year ends up.
Yeah, we think the 10-year over the next couple of years gets well below 4%. To 350 to 375. We think the Fed wants to get rates closer to its neutral level, which is around 3%. And we think the 10-year can keep moving lower from here.
See, Lisa, I can refinance my mortgage then. See? So, all right, Scott, what do I do here? Do I take the 4%, a little bit more than 4% I'm getting in the 2-year treasury, or do I go out there and try to be brave and take some credit risk out there?
Yeah, we like the active credit story. Right? If you think of a world where the economy is slowing, central banks going to reduce interest rates, that tends to set up for a pretty good environment for credit. We in the bond market, we on Bloomberg, we talk a lot about spreads. But remember, spreads are an awful predictor of returns.
Thank you. What you just heard there, folks, is gospel. Institutional people look at spreads, a comparison of two different yields. We mere mortals do not. Continue.
Yeah, so yield is the best predictor of return. And when you start to look at the repricing we've seen in the credit markets the past 2 or 3 weeks following this equity sell-off, you're looking at high yield, 7.5, high income funds north of 8. We think that is a really good equity substitute. Again, we'll have some defaults, right? We've seen this credit cycle moving through.
Right.
But again, pretty healthy returns.
Can you come in every day?
It's easy.
Paul, this is like my religion here, folks. It's about single point yield, not fancy spread talk. Mr. Sweeney, there's my lecture for the day.
Exactly.
Continue.
I look at my INGO function on the Bloomberg terminal, the Bloomberg Index browser. The best performance in the U.S. fixed income market has been mortgage-backed securities. Why is that?
I think mortgage-backed started the year or the last couple of years very cheap to credit. Right, wide to IG. As we've gone through this year, right, mortgages have kind of played a little bit of catch up. People worry about a recession. People worry about a growth slowdown. They do the flight to quality trade. Right, MBS is that flight to quality still AAA rated, and that's despite volatility moving higher. Right, mortgages trade off vol. So if we get any normalization in vol, MBS can certainly run here.
How do you guys in Alliance Bernstein think about some of the volatility we've seen in this market this year? We had, in the equity markets, we had a maximum drawdown of about 10% in the S&P. A lot of policy uncertainty coming out of Washington, D.C. How do you guys manage that at your, Monday morning meetings when you get everybody together?
Yeah, I think there's a couple. Like, as long as our longer term view is just for slower growth, right? Not a massive recession. We want to take this opportunity. We want to buy any widening in credit. So we want to kind of buy the dip in credit here. We get 10-year bonds towards 4.5%. We want to own more of them. So I think it's a tactical kind of environment as the equity market digests all the trade, all the Washington news. The bond market is doing the same thing.
Scott Diaggio with us here, AllianceBernstein. Just a brilliant note. Again, we protect the copyright of all of our guests. Get that note from AllianceBernstein. Economic data, just a ton coming on. Let's take a look right now at the economic indicators this morning. And it's just one single point here at an 8:30 level. The Philadelphia Fed, non-manufacturing, don't see it on the screen yet. But then housing data, Case-Shiller, which I adore, it's delayed, it's old data. Whoa. Now, I have to go back to this right now. We have a stunning print on what I consider tertiary data. Wow. The Philadelphia Fed non-manufacturing statistic was minus 13 prior. I don't have a revision for that. And the actual print moments ago was a negative 32.
Let me graph that out.
Negative 32. That's something. I just turned to Paul. We were on a break here. We were talking Duke basketball, and I said, the economic data here is going to speak volumes, and maybe that's where we are right now. 10-year real yield of 199 pulls in a basis point to a 198. Coming up at 9 a.m., Case-Shiller, and then on the new home sales and some conference board. The Richmond Fed, Paul's always glued to the Richmond Fed because it's spider-driven.
Sure.
And we'll have that later as well. Our economic indicators and all through the morning, they're brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. I don't have a revision yet on Philly Fed. That's a stunning number.
And Tom, I'm glad you called out the Philly Fed because I just put the GP function, lets you graph out the Philly Fed number over time. It hasn't been this week since kind of the end of 2020. So that is a sharp move lower. We'll keep an eye on that. We'll talk to some smart people like Michael McKee.
Let's wrap up here. Scott Diaggio is out on his phone buying bonds right now. I can see that.
So, Scott, I mean, you've got 6 strategies for kind of dealing with kind of the world we're in with staying on your toes here. One of them is think global. What's the fixed income play outside of the U.S.?
Yeah, I think there's plenty of opportunities for rates markets outside the U.S. where the economic outlook is even weaker than we think in the U.S., right? So think places like Canada. That is, going through.
We can still do that?
We can still think about.
Okay. Well, will they sell bonds?
It might be
us?
a muni bond at some point,
okay.
But as of now, we'll consider it a sovereign. But the economic data is weaker. They're gonna suffer from tariffs as we roll through this. If we look at parts of emerging markets, right, eventually they're going to get to the point where they have to cut rates. We think the German sell-off is a bit overdone right here as well.
Hey, let's go back to Canada. I see Mark Carney's in the Maritimes. I'm not sure where the other guy is. This one, they're in an election. They have a new prime minister. Turmoil. They're a 51st state. I don't get it. Is it full faith and credit Canada? Is it provincial Canada? Is it Dan Fuss loading the boat on Quebec Hydro? Which is it?
Yeah, I think it's just government bonds right now. The provincials look okay, right, to us, but you can just buy full faith and credit. We're going to play for more rate cuts. We're going to play for interest rates moving lower as the economy slows.
What's a typical yield there, a pickup over the U.S.?
You look at 10 years, they're sub 3%, right, today.
Their yield is sub 3%. Wow. I didn't know that.
No, me neither. What?
That's like, we have a very high yield.
We'll start paying more attention.
Okay, I just absolutely, this is
so
great.
much we can do, Tom.
Please come back. The note is something. On duration, now you're pulling in duration?
We're pulling in a little bit of duration. I would say for listeners out there, where we see an opportunity is really long end munis, right? The muni market is really gotten
beaten up. Can you name a
up.
piece of paper?
Oh, I think any AAA, whether you look at New York, some of the New York dormitories, some of the New York, electricity, et
I'm
cetera.
the biggest creditor to the state of New Jersey with my municipal bond portfolio.
If you look at what's happened, munis have underperformed. If you look at your IN function, right? Munis have underperformed the broader market. We've had a lot of issuance. People are worried about what potentially comes out of Washington as far as the tax-exempt status.
So there's what's a typical duration? What's the biggest mistake retail makes in munis? Do they end up buying 20-year or they should buy 10-year?
I think they end up buying 2-year when they should buy further out the curve.
They should go out further.
I think they should go out further.
There you go.
So if you look at the 30-year, just as a quick data point, right, it trades at about, so we look at munis relative to treasuries. It trades at about a 0.9, right? So munis are 0.9 less than 30-year U.S. treasuries. After tax, 7% yield.
Don't be a stranger. Lisa, don't let him out of the building. Scott Diaggio, Alliance Bernstein. That was just brilliant. Futures lift. Futures up 18. We're on YouTube around the world. Good morning, China and the Pacific Rim. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a slight lift to the markets. Investors still, though, cautious about upcoming tariff policies. We'll start with S&P futures up 0.2%. Same for Dow futures. Nasdaq futures up 0.3% or 60 points. The 2-year yield, 4.04%. That's a little changed. The yield on the 10-year, 4.35%, and that's up 1 basis point. To commodities, COMEX gold, $3,050 an ounce. We go to oil. Brent crude, $73 a barrel. WTI crude, $69 a barrel. The Bloomberg dollar spot index down about 0.2%. To earnings we go. Smithfield Foods up more than 2%, posted a profit despite lower sales. It's actually its first set of quarterly results since returning to the U.S. stock market. Then shares of spice maker McCormick off about 3%. Reported fiscal first quarter profit trailed expectations. After the close, we move on to GameStop and Boeing also in the spotlight this morning. The Wall Street Journal says it's looking to withdraw its plea over misleading regulators before those 2 fatal 737 MAX crashes. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. And again, a lift to the market off the economic data. We'll have to see where that goes. And the yield space as well. I'm going to call it a churn here. Just a churn in the yield space, but much more economic data coming up. Stay with Paul and Alex Steele for the key 10 o'clock data. Today we celebrate Phil Taze would come in here and we would talk to him about, the market, and he would mention the word uncertainty 14 times. Taze Asset Management. But today we celebrate a really challenging book, and it's a particularly important book if you're missing the retirement ballet, the behavioral portfolio, managing portfolios, and investor behavior given a complex economy. Congratulations on timing here to have the amount of uncertainty we have on the release of the behavioral portfolio. You've got a whole section on the great dilemma of a retirement undershoot. Mm-hmm. Are we investing too cautiously because we're scared stiff?
Yeah, so what we're doing is we're ignoring a significant chunk of history, Tom. I mean, the two episodes I point out, number one, the 36-year bond bear market that happened between 45 and 81 is completely not excluded from people's planning when they're planning for portfolios. But obviously the big one is the Great Depression. And what I do in the book is I do what I call a visualization of what a balanced portfolio would look like during the Great Depression. In the first 3 years, it's down 72% if you're taking distributions. Then we have a 5-year bull market, but then another 5-year bear market. It's unnavigable. So what the entire investment community is doing, as brilliant as it is, and it is brilliant, is deciding we're going to look back 50 years and we're going to base all of our planning based on that, and we're going to exclude anything before that looks like it might be a nuclear bomb.
But my mother and my father, classic Depression babies, kept waiting every 5 years for the next depression. Let's, as a general sense, say it didn't come because of credit expansion, whatever the reason, maybe World War II, who knows? Are you predicting a 1930s?
We're not predicting it, but the one thing I'll say is that if you look at certain elements, so for example, when's the last time we had 100% debt to GDP in every developed nation in the world, essentially? When's the last time we had a declining demographic population in every developed country in the world? And also, when had we been at sort of record price to book, like we were in the internet bubble burst? So I think what you need to do is say, look, we're going to go ahead and include this history, and instead of making a prediction for down markets, we're going to say this could happen again. And by the way, based on where all the data is right now, it might actually be more probable than not.
Talk to us about the 60-40 portfolio. I'm teeing you up here, bro. Go.
Well, so, the 60-40 portfolio is an historical accident. Bonds were created to fund governments and later fund companies. Stocks were created to share ownership. At some point, someone came along and said, let's put these two things together. And sometimes it's an effective diversifier. Sometimes it's not. But I think what's interesting is that, Warren Buffett said derivatives were a weapon of mass financial destruction. Actually, you can use derivatives, option contracts, and things like that to create real negative diversification. So our strategy is what we call a behavioral portfolio. It's what I lay out in the book. And what it does is it says take half of your equities and put it into hedged equity strategies so that it can uncorrelate from negative economic activity like the Great Depression.
Fine.
Yeah. And for the fixed income side, be adaptive.
Everyone listening worldwide is saying, okay, so this is the Phil Tays gold exercise where I got right now a linear extrapolation in gold, which is 80-ish, 1980-ish. Is gold part of the behavioral portfolio?
It's not. Gold can be a great diversifier. The problem is over the very long term, it just produces, CPI. Right, so you can have moments in time when you get some appreciation, but what you need to have are instruments in the portfolio that can produce verifiable, reliable, long-term above inflation growth.
Okay, so is
or
that
income.
Apple? Is that Apple? I mean, I got a use of cash and free cash flow with Apple that at least X depression. Paul, if we have a depression, we're still buying 6 toys a year.
Exactly.
But are big free cash flow quality stocks appropriate in a portfolio of gloom?
Yeah, absolutely. So, by the way, I'm not a doom and gloomer. I'm a boom, boom, kaboomer. So you got to embrace the boom. A boom, boom, kaboomer. You embrace the boom. You acknowledge the possibility of the kaboom. I want to create a kaboomometer. But look, half of the equities portfolio needs to be in conventional stuff. And so the things that have done so well, if you're positioned in that, plus you're positioned in it with hedges on the other side too, you've still got your 60% equity allocation. Just half of it is hedged in case things move down, but absolutely you need companies like Apple in your portfolio.
How about alternatives? Where do alternatives fit into an investor's portfolio?
So one of the criteria in the book that I lay out is what I said before. It needs to be a reliable provider of growth or inflation. So think about one alternative, which is managed futures. Managed futures is essentially just a less than zero sum game with a potentially really good manager. So I would say that would not qualify. So if you look under the hood and see what's the engine of growth, if it could be something like stocks or some other source of reliable growth, then you go there.
Phil, thank you so much. Congratulations. Phil Tays, a lot of work. Tays Asset Management, the behavioral portfolio. I'll put it out on Twitter and LinkedIn. A very nice, concise read on something not talked about enough, which is what if. Speaking of what if, with the news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Treasury Secretary Scott Bessent and National Economic Council Director Kevin Hassett will be on Capitol Hill today. They'll meet with House Speaker Mike Johnson and Senate Majority Leader John Thune as Republicans get to work on a massive tax cut bill. Wendy Schiller is head of political science at Brown University.
I don't think the Republicans in the House have sort of healed the rift with the people who are really concerned about the deficit, the people who are really concerned about cutting Medicaid. Because remember, the biggest share of federal subsidy to Medicaid is in the Southeast. Louisiana, for example, Alabama, Mississippi. The poorer you are, the more money you get from the federal government through, for Medicaid subsidy. So this is a really delicate thing to try to slash and burn Medicaid for the core area of Republicans in the House. And then you've got the tax cut bill for the deficit. And I just don't see yet, even though they talk about it, major consensus moving forward on how you're balancing all three of those items.
Brown University's Wendy Schiller was a guest on Bloomberg Daybreak. Senior foreign officials and major tech companies are pushing the Trump administration to rethink the country's global semiconductor strategy. It comes as the U.S. prepares a controversial framework for controlling artificial intelligence development around the world. The so-called AI diffusion rule, which restricts the number of AI processors that can be exported to most nations, prompted an outcry from tech giants. An apparent major lapse in national security. It appears members of the Trump administration inadvertently shared the tales for an attack in Yemen with journalist Jeffrey Goldberg of The Atlantic on a text chain with Vice President Vance and Defense Secretary Hegseth. The White House denies that. Bird flu has jumped into a new species. An official government statement says the virus has been detected in a lamb during a routine inspection of livestock in northern England. Epidemiologists are concerned because it shows the avian flu spread may not be confined to the cattle and other mammals where it had previously been detected. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, that economic data point from Philadelphia we saw, I don't have any wisdom. I can't do like a McKee vamp on it. But, what I'm looking at is the data of a data-dependent Fed. Everybody's telling us the Fed will be wait sort of feeling, and all my radar's up.
Yeah, I mean, my radar kind of got perked up, 10 days ago with the UMich data, which really pointed to some concern. We're going to get some refreshed University of Michigan sentiment data this Friday, so we'll get to see if that's a trend at all. But again, it just some of the earnings announcements we had from some of the airlines, from some of the retailers, talking about
we'll have to see.
The consumer.
We'll have to see. From New York City, this is Bloomberg Surveillance. We're out on YouTube.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney here. Some economic data coming up. Futures ebb a little bit, up 12. Right now, the VIX is very sprightly, 17.18.
Oh, yeah.
What do we need? We need to take a look at some stocks on the move today. Always, we're joined by Bloomberg's Lisa Mateo. Lisa?
All right, we're starting with Tesla because shares have really been all over the map this morning. They were lower, then they moved higher, up as much as nearly 2%. The reason why is that it's not doing so well in Europe. So let me get to some of the numbers for you. Sales fell for the 10th time in the last 12 months there. 40% drop in February compared to the same month last year. Sales fell 43% in the first 2 months of the year, despite the 31% rise in industry-wide EV registrations. So a few things. They're counting on the redesigned Model Y to boost sales, right? That's their big draw. But it's been hit with these production pauses. Its factories worldwide earlier this year. And then, of course, you have this growing polarizing feel around Elon Musk himself. You know, people have been vandalizing dealerships, the cars there, and vandalizing different charging stations here, not only here, but abroad, too. So that's the latest on Tesla, but its shares really all over the map this morning.
I mean, do we think sales are down because of the Elon political issues or because of maybe competition from BYD?
BYD competition,
both? Yeah,
correct. The mix of the two.
Yeah.
Because BYD did fantastic.
Do we have a date on this, like April 2nd for tariffs? Is there a date where we get clarity on the uncertainty of Tesla? I don't think so.
I don't see how long he keeps a high profile in the government, I guess.
Next.
Okay, Trump Media and Technology. We talked about this earlier. So Trump Media and Technology plan to work with Crypto.com. They want to launch ETFs. Shares have been up as much as 10%. Okay, so here's how it works. If they plan to offer made in America investments, including ETFs that are tied to digital assets. This is on a platform that's owned by Crypto.com. And the products are going to be available this year, US, Europe, Asia, pending, of course, regulatory approval, as always. But it'll include Kronos, which is a virtual currency affiliated with Crypto.com. But the interesting thing about this, what I find, is that Crypto.com was in this legal battle with U.S. regulators last year, but it dropped the complaint after Trump's election victory. So that's what I find that points out interesting. But he's the largest shareholder, President Trump.
Yep, Trump Media Technology is up 9% pre-market trading, down 38% year-to-date, down 58% over the trailing 12 months. So that's another volatile stock.
You got one more?
And I do. It's an interesting look on the housing market.
33 more?
33 more. My last one for you. KB Home. Disappointing first quarter results cut its forecast. Shares have been down as much as 8% this morning. It said the spring housing market, it's been a little bit slower than usual. A few things they pointed to: the consumer working through affordability concerns. Also, here's the word, uncertainties. Yes, we've heard that a lot. Macroeconomic, geopolitical issues. And it's all causing the consumer to put off buying a home. But there were a couple bright spots. They did say the company is making some adjustants to provide some better value, improving sales.
Decline.
Exactly. Bingo.
I got the Redfin, whatever city, the Redfin feed.
Yeah.
And everybody's lowering. Am I right? A lot of houses, they're lowering the prices.
It depends on exactly where.
Like, what do you choose?
Well, my neighborhood house goes on for sale. It's gone in 15 minutes.
Correct. 15
minutes.
Me too. Up in New Jersey, it's gone like this, overpriced. But if you move a little further away, then that's where you can have some negotiating room. You have some wiggle room.
Like through the Delaware Gap.
Correct.
You have to go.
That's where
you're like
I
Daniel Boone going across the Delaware Water Gap. That's what Lisa does.
Stock movers. For more conversations like this with Lisa Mateo, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. And that would be, Stock Movers. I mean, it's like Kriti Gupta and Lisa Mateo.
Sure, all the smart people.
Kriti's like killing it. She won't come on our show for Stock Movers.
No.
Exclusively 655 with Nathan Hager.
Yep, exactly.
Out of Brown University. She met a person who met another person who got the song into Reality Bites, changed her life. Lisa Loeb, good morning.
I thought that I was stronger. I thought, hey, I can leave, oh, but now I know that I was wrong. I missed you. Yeah, I missed you. You said you caught me cause you want me, and one day you let me go. You try to give away, keep her, or keep me cause you know you're just so scared to lose. And you say
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We are here on finance, on the linkage here of equities into economics. And Paul, dare I say, our many uncertainties. Jim Bianco with us here in a moment.
Very good. He'll give us some sense of kind of how he's factoring in maybe some of this tariff talk here and how that may impact his economic outlook.
Can I say certitude? Just to get the show started?
Throw it out there, yeah.
Chicago Cubs will do better than the Chicago White Sox this year.
Okay, that sounds solid.
We're pulling away from uncertainty here. Jim Bianco with us here from Chicago in a moment. Futures up 14, up 18. They pull back. Futures up 12 right now. Nasdaq up fractionally. The VIX is really a story in from an 18 level to 17.20. The yield space, it's higher yields, but it's sort of kind of like, I look at the 10-year real yield. I got up to 1.99%. My eyes are failing me, 1.98%. Right now. Dollar fractional weaker. Yen out to a 150 level got my attention for those who keep score at home. And, what do we say about Bitcoin? I mean, 87,000 is,
It's a little bit, again, it's pulling back a little bit today off about 0.8%, but 87,000 on your favorite cryptocurrency.
Well, we're going to have to see. I mean, there's just a lot going on this morning. Bloomberg Surveillance. We're brought to you by IBKR. Will the U.S. CPI, will it exceed 2.4%? In March of this year, 2025, trade your prediction with IBKR forecast trader. The yes, recently it's 60%. Buy yes or buy no and earn $1 if you're right. Go to ibkr.com/forecast. And from the Interactive Broker Studios, we thank them for their support. The Bloomberg Business Flash, Lisa Mateo.
And we've got futures. Trying to hold on to that momentum from yesterday's big gains on Wall Street. Right now we have S&P futures up 0.2%, 13 points. Dow futures up 0.2%, 91 points. And Nasdaq futures up about 0.1%, 38 points. The 2-year yield 4.03%, little change. And the yield on the 10-year 4.34%, and that is little change. The Bloomberg Dollar Spot Index down about 0.2%. A few companies making news. Alibaba's Joe Tsai. Well, he's putting out a warning of a potential bubble in data center construction. He's arguing that the build-out pace may outstrip initial demand for AI services. And speaking of AI, DeepSeek released some updates to its V3 model. It promises to deliver better programming capabilities. And in other news this morning, the kickoff to the Super Bowl nearly a year away, but NBC Universal already reaching out for ad dollars. Sources telling Variety it's looking for about $7 million for a 30-second commercial spot in the big game. That is your Bloomberg Business Flash. Paul and Tom.
I mean, that's as far as you look it up, but I believe we had a 7 million statistic last time around.
Yep.
Just about the same. Yeah.
I mean, the thing is like a Swiss watch compared to everything else in sports.
Exactly. It's going to, it gets 100 million viewers every time.
And the Chiefs again?
Yeah, exactly. Who knows?
So we'll have to see.
But we got first pitch baseball coming up in a couple of days. So.
Well, yeah, but we do. But I'm a big baseball fan like Jim Bianco. But the answer is football's popping it. March Madness popping it. I guess.
Yep.
We'll have to see. Joining us now, Yeoman's Duty, Early Morning California, James Bianco joins us, president and founder at Bianco Research. Jim, the arch call here is your sticky inflation report. Let me digress from that to the theme of the morning. I've heard the word uncertainty 47.5 times this morning. Is uncertainty an opportunity or not?
No, I think it's an opportunity. We've overdone the uncertainty thing. A bunch of academics from Stanford have put together an uncertainty index and last week it hit an all-time high. Now, let me restate that. We have more uncertainty now than we did during the COVID shutdown, during 9/11, or during the financial crisis. Now is more uncertain period. It isn't. We're overdoing it right now. Everybody's gotten to the point where we're talking about the end of U.S. exceptionalism, which was a term invented 200 years ago by Alex de Tocqueville. So I don't understand why we're getting ourselves all worked up that this isn't just a 10% correction in the stock market, but this is the end of the American experience right now. So this is the type of environment where bottoms are made in markets. And I think that's what we've done last week. And it's being confirmed also by interest rates, the 10-year yield, also making a one-month high today.
The Stanford people doing this include Nicholas Bloom, who is definitive on work from home. This goes back 11 years to a foundational paper, Fluctuations in Uncertainty. So when is the when, Jim Bianco, on a time basis? How do you know when to take the opportunity of uncertainty and invest?
Yeah, that's a good point, because usually you want to wait until you get to kind of the overdone pace. And fortunately, this time we've got this index that Baker, Bloom, and Davis have put together that is at, like I said, a 40-year high. We've also got, talk, over-the-top talk, I think, about the end of U.S. exceptionalism, not understanding what that word means. Now, all of a sudden, 200 years of, the American experience has been reduced to a bad quarter in the S&P, and it's over. And so it's that kind of environment that you would look for a bottom in the markets. And that's what we've seen in the last couple of weeks, while the stock market, the S&P, has rallied about 5%. And yes, you're right. It's rare that you get it that as extreme as we've seen in the last 10 days or so. But at least it's been a little easier to identify this time around.
So, Jim, I'm assuming that the recession scenario is not in your forecast?
No, I don't think it is. Even when you hear economists talk about it, they'll say the soft data is very weak, but the hard data isn't, meaning the actual economic data is actually holding up and the opinion data is what's falling apart. Now, typically, the opinion data lags the soft data, the hard data, excuse me, meaning that first the economy turns down. First, people lose their jobs. First, they stop spending. Then they turn pessimistic. But when they typically turn pessimistic first, when no one's losing their jobs and no one has stopped spending, that usually doesn't last. And that's why I don't think we're going to have a recession, at least at this point.
Jim Bianco with us, thrilled that he could be with us. I can't say enough, folks, about his call for sticky inflation. He was lonely a number of years ago when that occurred. Good morning on your commute across the nation. On the left coast, Jim Bianco, good morning on Apple CarPlay, Android Auto, and Sirius XM, channel 121. Paul?
Hey, Jim, Tom was just mentioning that, he and I and Lisa Matei, we hear a lot from our guests about uncertainty in the marketplace, and the market doesn't like uncertainty. How do you, when you talk to your clients and they're trying to figure out what this tweet means, what that tweet means, what this policy pronouncement means, how do you suggest they navigate all that?
I think what they have to start with is the premise that when Trump was elected president and his cabinet and his 80-odd million voters, that they voted for change, and that's what we're going to get. And whenever I hear people tell me, well, they're very worried about the tariffs, they're very worried, about the payment for security that we're demanding out of Europe, or maybe the sovereign wealth fund, or all three, I kind of go back to them and say, what do you think we should do if we don't do that? Going back to the status quo of $2 trillion deficits and massive treasury borrowing, that's what they're trying to move away from. So I've argued that we have to give this policy a chance to see if it works. Now, if it doesn't work, then we'll have to try a different type of policy. But I don't think we're going back to the status quo. And that's really where I think most people are struggling is this is not what we're used to. And so we're a little bit unsure of where we're going because it's new territory. But I don't think we're going back. And that's probably the most important message.
Do you see 3, 2, 1. Jim Bianco, do you perceive continued use of cash by companies? Cam Dawson was in, and we're arguing about, selected Mag 7 is a utility holding because of free cash flow and quality of free cash flow. Do you agree with that?
Yeah, I mean, cash has taken on a very important role in this market. Yeah, and largely because it's got such an attractive yield. Right now, a typical money market fund will yield 4%. And that is more than the inflation rate. I'm still in the sticky inflation rate camp, Tom, but I'm in the 3% inflation rate camp. So a money market fund is going to give you a real yield, a yield above the inflation rate. So any company that can throw off cash, cash is a valuable thing right now. It's not trash like it was, 5 years ago. It's not TINA. There is no alternative to cash like it was pre-COVID. Right now, cash is a competitive investment. It's outperforming the stock market this year than we've seen in recent years. So anything that can give you cash is going to be a positive.
Yeah. You see the math on that, Paul? You do triple leverage 4%. That's 12% gross. I take out my 210 basis points and everybody's happy.
Everybody's happy.
That's the way it works.
That's Jim. That 10% pullback we had in that peak to trough S&P 500, was that I guess what some would suggest is a kind of a healthy pullback in an otherwise longer-term bull market? Or was it something different?
I think it was a typical pullback. You'll get one about every 18 months or so. The last one before this month was October of 23. So that was 15 months ago. That's about what the calendar would expect us to do. And we should do about 5% pullbacks a year in the market. That's the typical type of action. So for the moment right now, this looks like, a typical pullback. Right? We had a catalyst with it. Just like in October of 23, the catalyst was a 5% 10-year yield. And that's all we wound up doing was the 10% pullback. And then the market kind of stabilized and it started to lift off from there. And I think this is what we're seeing right now.
Given that backdrop, Jim, where are you suggesting that people look for opportunity over the next 6 to 12 months, given kind of what we know about some of the uncertainty that's going to be, I guess, surrounding a lot of these markets going forward?
So while I've been very optimistic, look, we've bottomed, the market's going to recover and the like, I don't think it's going to necessarily blast through to all-time highs. It may technically make an all-time high, but you're not gone, I think, are the years where the S&P is going to give you 20%. So right. I think the aforementioned cash and the bond market at 5% yields in the bond market, I think are going to provide you a competitive investment to the stock market right now. And that's because as the market makes it back to the all-time high, I wouldn't be surprised if we start to see yields push well above 450 towards 475. And that'll be the newer concern for investors.
Jim,
not enough to bring stocks down, but not go up.
What do you see on the labor economy? Your purview from Chicago a la Diane Swank is different. You're not within 3 idiot zip codes in Manhattan. The Fed models out to that singular headline, 4.4%. Do you model out to a higher unemployment rate?
Slightly higher unemployment rate. I think the biggest thing that we're going to struggle with is going to be the impact of the slowdown of migration into the country and what that means for change of population and everything. And I understand the argument that we might see higher unemployment rates as we move forward, but I suspect that it's going to be overstated, the amount of labor weakness that we're going to see from the labor market, and that it's probably going to hold up much better.
That's a huge deal. I mean, Jim, Torsten Slok published, I believe, yesterday or the day before, his new run rate on non-farm payrolls is sub 100,000. Is your new run rate because of a diminished immigration sub 100,000?
I don't think it's going to be that low because typically, if you're looking at the migrant workforce is usually not a workforce that gets a W-2, that has withholding taxes. That's who gets measured in the payroll report. So I suspect that will stay a little bit stronger. Now, in the household report, they can get picked up in that, and that might show up as a higher unemployment rate. So I'm with them, at least that there will be some weakness because of it, but I think it's going to show up in the other report, the household report and unemployment, as opposed to lower payrolls.
Jim, given all this backdrop here, what do you think our Federal Reserve, how do you think they're going to proceed for the remainder of this year?
I think the May meeting is the most important meeting of the year because if they can't find a reason to cut rates in May, there is no reason to cut rates in May because they've got the 10% correction, they've got the hand-wringing about tariffs, they've got the talk about a recession, and if we get to that May 7th meeting and they still can't find a reason to cut rates, then they're done for the year, and that the rate cut cycle ended last December. So I don't think they will, and I think that this means that they're pretty much on hold at least until the next cycle emerges. Maybe something else comes along that weakens the economy, or we start talking about rate hikes later this year or into next year.
For all of you across the nation, joining us now, surveillance sommelier James Bianco. Jim, out of Napa Valley, I mean, I look at the Screaming Eagle in Oakville, and it's really, really exceptional, but it is a different tinge than the wines of Rutherford in Napa Valley, aren't they?
Yes, this is a fantastic place to be if anybody can ever come out here and sip wine and enjoy the weather. I highly recommend it.
Which wine, which beverage of the wine do you like best? I mean, is there a certain nuance to the Napa Valley wine that Michael Barr should know about?
They all do. There's vineyards every half mile here, and each one is very different. And so, this is the wine connoisseur's heaven to be out here.
Is it as gorgeous as that Apple screen on Sequoia? Everybody's got this now on their computer screen. It's this gorgeous view of, I guess, Napa Valley. Is it that beautiful, Jim Bianco?
Yes, it is. I wish it wasn't still dark out. I'd flip the camera around and show you the view. It's unbelievable.
Well, you're a trooper to be with us this early. 9-7-6-5. Is that 6:15? Yes, 6:15 in the morning. Thank you, Jim Bianco. Daylight savings. If it wasn't daylight savings time, we could see Napa Valley. Jim Bianco, thank you so much. With Bianco Research, a trooper to be with us from the left coast this morning. And again, we say good morning to you on your commute in early morning California as well. Futures lift up a little bit, up 16. We may get a 16 on the VIX, 17.11. That's a wow statistic. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, in the legal battle over the Trump administration's deportation flights, a federal appeals court judge told government lawyers that Nazis during World War II got better treatment than the hundreds of Venezuelans who were flown to an El Salvador prison. At issue is the deportation of hundreds of alleged gang members who were flown to the notorious prison in El Salvador under the Alien Enemies Act of 1798, a law last used during World War II. When asked about Judge Patricia Millett's comments, White House border czar Tom Homan called them ridiculous.
Just another example of a radical judge saying something that's just disgusting, to compare anything to the Nazis, the Holocaust.
President Trump has been calling for the impeachment of Judge James Bosberg. He's the judge who verbally ordered the government to turn the planes carrying the Venezuelans around. They weren't. President Trump expects efforts to reduce the federal government's workforce to reach an appropriate level in the next 2 to 3 months. Bloomberg's Amy Morris reports from Washington.
President Trump told cabinet officials the efforts of the Department of Government Efficiency, or DOGE, will continue, but he indicated they do have an endpoint in mind.
We're getting down to a point we think probably over the next 2 or 3 months we'll be pretty much satisfied with the people that are working hard.
Trump acknowledged the government overhaul might not be popular, but he defended the effort. The Trump administration has also asked the Supreme Court to halt a ruling that ordered the rehiring of thousands of federal workers who were let go in mass firings across several agencies. In Washington, Amy Morris, Bloomberg Radio.
Top national security officials for President Trump, including his defense secretary, apparently texted war plans for upcoming military strikes in Yemen to a group chat in a messaging app that included the editor-in-chief for The Atlantic, Jeff Goldberg. White House Press Secretary Caroline Leavitt, a few moments ago in a media post, says Goldberg is well known for his sensationalist spin. Leavitt went on to say no classified material was sent to the thread. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Okay, it's in our agreement. I mean, Lisa's got a 200-page agreement.
Sure.
With Bloomberg surveillance. It's buried like page 170. There's to be obligatory time each March where we speak about the Detroit Tigers.
Oh, nice.
How about that? 3 games, opening season, the Los Angeles Dodgers.
Yes.
That's going to be difficult. But they were the Detroit Tigers last year. For those of you worldwide, the oldest player in the team was 23.
Oh, yeah.
I mean, I'm kidding, but What a joy to watch the Tigers.
You're not
season.
far off. We talked about this and joked about it last year. The entire payroll for the Tigers was $18.7 million.
Yeah.
Yes, it was.
Yeah.
And I'm like,
that's
oh
what
my
they pay.
goodness.
That Soto gets at like the first 4 days.
Yeah,
plus
exactly.
parking fees. And Scuba, who's magical, he's still with the team.
Yeah.
You know, I mean, they kept their best pitchers.
I like the rotation. I'm amazed.
So you're feeling pretty good at this point? It's March.
I got a little tingly feeling here.
They're
You
in
know?
first place, at least for now.
Exactly.
3 games of the Dodgers is tough. I was talking to somebody last night. I talked to Mindy. Mindy works for the Baltimore Orioles. She's biased. Mindy, said, "Who's going to beat the Dodgers?"
Yeah,
it's that simple.
That's a good point.
I hate realism, but that is true. But you know what? The Yankees and the Mets, I mean, there's a lot of buzz going on in the New York City area, especially about Soto.
So you guys are having a discussion here and we're Red Sox free?
Yeah, why not?
I mean, come on, the Red Sox. They spent 4 years checked out, and this year they finally showed up. We got some good things going.
The AL East is going to be very tough, as it usually is. It's going to be very tough.
Usually is.
Because Baltimore, we have to talk about Baltimore.
Okay.
Because we have a vested interest there.
Control room, the control room goes go O's. They know where the paycheck comes from. Thank you, Sarah, for that reminder. I needed that. We're looking at the Detroit Tigers. For those of you internationally, a fun team to follow. They're up to age 24. Futures up 16. The VIX 17.10. It's Bloomberg surveillance.
Today at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Futures Report sponsored by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. Well, we've got a lift to the markets this morning. This is after more economic data. The March Philadelphia Fed non-manufacturing activity index, well, it fell to the lowest level since May of 2020. We go to the housing market. FHFA house price index for January rose 0.2% from the previous month, lower than expected. Then you have S&P CoreLogic, Case-Shiller, 20-city composite. It was higher than expected month over month, but lower than expected year over year. At 10 a.m. Wall Street time, we get new home sales as well as a read on consumer confidence from the conference board. We head over to futures now. Nasdaq futures up 0.2%. Same for Dow futures and S&P futures. The 2-year yield 4.03%. That's little change, and the yield on the 10-year 4.34%, and that is little change. With the Bloomberg Dollar Spot Index down 0.2%, and Bitcoin down 0.2% at just above 87,000. We'll stick with crypto. We'll go to Trump Media and Technology because it plans to work with Crypto.com to launch ETFs. That has shares higher, up about 9%. And Tesla's European car sales, well, they fell 40% in February, the 10th drop in the past year, but shares up more than 1.5%. And then Shell saying it's going to expand LNG sales by 4 to 5% annually until 2030. Its ADRs are up about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. Greatly appreciate it. Again, futures up 16. The VIX giving me some love, 17.10. We don't do enough about this. Sweeney and I have the uncertainty meter here, and we heard the word uncertainty 100 times, and somebody said, let's talk to somebody actually sitting in an office telling people with sweaty palms what to do. Rose Advisors is with Hightower, and Patrick Frisetti joins us today to talk about what's actually going on out there. How scared are the Rose Advisor clients?
I think they're cautious. I wouldn't say they're very scared. I mean, the way we've positioned things over the past year, I think we've been somewhat prepared for this. I mean, we own things like gold and some defensive companies, and we have a good set of fixed income, typically short to intermediate duration. But there is concern, and when you think about, you're just mentioning, yesterday there's the PMI numbers, the flash number that came through, ISM. Those are concerning, especially when the Europeans are putting through a tremendous amount of fiscal stimulus.
I have crystal memory of 87 going back. I mean, I was there for 1837 as well. And Patrick Frisetti, never have I seen a time like this. My dog's vet bill won't pick up his cell phone because he's worried about what the political news would be. How do you manage the cacophony of emotion that America's feeling right now off their cell phone in the news flow?
It's a matter of you have to educate your clients to filter out the noise as best as possible. And I think if you're prepared, if you're reactive, that's problematic. If you're proactive, and I think we've been able to do that over the past 6 to 12 months, then that's positive. And I think, clients tend to appreciate that. And again, if you educate the client accordingly, even in this, 24-hour crazed, world.
24-hour, 24-minute. Oh, please.
Patrick, so do you guys have a kind of a model portfolio for your clients, knowing that every client's different, but do you guys have a kind of a view of stocks, bonds, alternatives, that kind of thing?
We do. And with our model portfolio, and I'll just speak from equities just because, that's typically how people compare us. They're always looking at the indices. It's definitely been more defensive, in owning, like I said, having an allocation to precious metals. That has helped us over the past 12 months, really 24 months. Defensive consumer stocks. I've speak to a lot of these consumer companies, and they're still having to pass through inflation costs. I mean, whether it's cocoa, being a feedstock to some of the, the snack companies, or coffee, up 2x over the past couple years, and 4x over pre-COVID levels. I mean, your cup of Sanka is up, double, 4 times over the last few years.
It's been painful.
It's been very, very, very challenging.
How much cash do you have right now as a blended basis within families, high net worth families and all that?
Between 10 and 12%.
That much?
Yep.
Way more than a prospectus long-only mutual fund.
Correct.
What's it? How do you manage? How do you trigger that into equities, into bonds, into alternatives? What's the catalyst to lighten up on cash?
Well, when we were in the middle of the summer last year, and knowing that we could have a potentially very close election with policies that were going to be extremely different, and the Fed's response, I think, to some of those policies was in question. And I think markets, as we know, do not like uncertainty. And so that's why you add more cash.
Pat Frisetti with us here as we get the markets open. We need to turn to Lisa Mateo.
Yeah, and we'll see how they're open after one of the best days for the U.S. stock markets this year yesterday. So we'll start off with the S&P 500 up about 0.1%, 7 points, 5,775. The Dow up 0.1%, 61 points, 42,637. And finally, the Nasdaq up about 0.1% as well, 18 points, 18,207. As far as the yield space, the 2-year yield 4.02%. That's down 1 basis point. The yield on the 10-year 4.34%. That is little change. We have the Bloomberg Dollar Spot Index down about 0.2%. We have Bitcoin slightly down about 0.1%, just over 87,000. Checking with the Mag 7 because yesterday Tesla led with shares up about 11%. Right now, well, Tesla shares are up about 0.5%, but leading the Mag 7 is Meta up 1%. That is your Bloomberg Opening Bell report. Paul and Tom.
Lisa, thanks so much. We're looking at, like what do you do? What is the process here of actually investing? Patrick Frisetti with us, with Rose Advisors. So I'm going to say the typical thing is a couple or maybe 3-4 older people, and one of them's really into talking to Patrick Frisetti and your team about what's going on, and everybody else is out in the Hamptons trying to figure out where to have lunch. How do you deal with a high net worth that's way more interested in having lunch?
You have to bring the subject to them on a regular basis and educate. Again, it comes down to education.
I agree with the education part. It's way different than when we were kids.
Yeah.
How about alternatives? I mean, you talk to wealthy families. When I talk to registered investment
you
advisors,
mean Bitcoin?
Exactly.
Yeah.
When I talk to registered investment advisors, I'm shocked at when they tell me that their clients really want to be in alternatives, private equity, private credit, hedge funds, but not 5% or 10%, much higher levels, like you might see in an endowment or something, 30 or 40%. How do you guys position alternatives for your clients?
Well, if we think that it will be potentially an uncorrelated asset with positive returns over time and with exposure that they don't otherwise have, I think it makes sense. I mean, you mentioned Bitcoin, Tom. I mean, Bitcoin's correlated to the Nasdaq. Just own some Nasdaq stocks. Here's, call it a day. But with alternatives, I think that the biggest thing that I have found, honestly, with alternatives, which is a misconception, is that they think there's less price fluctuation when there clearly is not.
Okay,
just because there's not a daily market, it's the most ridiculous thing in the world. And I think that's the attraction.
I got to get this in. I got one final question. It's too important. The gimmick now, which was the gimmick 30 years ago, the gimmick 60 years ago, is to own stocks and write a hedge, whether it's call writing or whatever. All the big banks are doing it in that. What's the downside of hedging away substantial gains?
Potentially, hedging out, gains that would otherwise protect your purchasing power. I think that's really it. I mean, if stocks
is it a marketing
moving
gimmick or is it a tangible process for high net worth?
I think it's tangible because we use, like I've said, I started this with, we use gold as a partial hedge. If you own stocks, I think you should own gold in this environment. I'm not a gold bug, but I think there is a use for it.
Yeah, Lisa just emailed me. She said, we got to make news to Patrick. Gold to 4,000?
I would say over the next 3 to 5 years, it'll be beyond that.
There you go. $3,058 today, up another $15.
I know.
I mean, Goldman's 3,100 call. I mean, it's coming to fruition. How about that?
Patrick, thank you so much. Really appreciate it. Patrick Frisetti with us, Rose Advisors, on like the actual emotion of what do you do? We don't do this enough. And the answer is, like, what do you actually do in the market? Of course, a lot of different opinions on that. I thought Jim Bianco was more optimistic than I've heard him in ages.
Yeah, he's just like, I think he's all in here. How about that?
What we are is we're going to look at it. We're not to 16 on the VIX, 17.23. The Dow up 88 points here. It's sort of a nudgy. That's CFA level 4. It's a nudgy market, is how I would put it right now. Bitcoin's going to give me 88,000 there. We're not there yet, but we note it. And we note the Sweeney yield, 4.03%, the 10-year yield, 4.34%, that 10-year real yield, 1.97%. We're on YouTube. We are humbled internationally. Subscribe to Bloomberg Podcasts. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. While stocks trying to overcome the latest tariff threats, they're really trying to extend Wall Street's Monday rally. Right now, pretty much treading water. We have the S&P 500 up about 5 points, the Dow up 43 points, and the Nasdaq up about 19. The 2-year yield 4.03%. That's little change, and the yield on the 10-year 4.33%, and that is little change. We go to commodities. COMEX gold $3,062 an ounce. Over to oil. Brent crude $73 a barrel. WTI crude $69 a barrel. The Bloomberg Dollar Spot Index down about 0.2%. Few stocks on the move. Mobileye Global, their shares up more than 5%. This is after a deal on driver assistance technology with Volkswagen Group. And then CrowdStrike Holdings, Cloudflare rallying after being upgraded by analysts. You have CrowdStrike up 4%, Cloudflare Flare up 5%. And a sign that more U.S. federal workers job hunting as President Trump, Elon Musk, Doge targets agencies for cuts. Indeed reported a 50% surge in applicants from those affected agencies. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. It's a triumph. The book party is ginormous. They were going to do it at Citi Field, but it just
I knew better than to go to that because it would get out of
How
hand.
not to invest. Here it is. I'll get it out on YouTube and out on LinkedIn and Twitter today. How not to, and the key thing is this word not. What not to do is so much harder than what to do. Barry Ritholtz joins us right now. I'm going to go to page 56 right after you beat me to death, thank you. And you say lose the news. Right now the news is like it's never been a wise one. How do you lose the news? How do you lose the geopolitical uncertainty that we're living?
So you lose the news is a little bit of hyperbole. The message of the book is, the epistemology of this is that the world isn't black and white, that there are shades of gray. You can't be all in or all out of anything, and you just have to bring your critical analytical thinking tools to being a media consumer. And you have to ask yourself, why am I watching, listening, reading this person? What's their track record? How many cycles have they been through? Are they experienced, or do they run around with their hair on fire, or are they cool, calm, and collected? Right. And so lose the news means don't be a gullible, naive consumer of everything from algorithmic social media to, but you have to be selective. And I reference you in the book as if you're going to listen to radio, you can't do much better than Tom Keene.
Okay, well, the bottom line is, though, we're drowning in uncertainty right now. Paul and I are keeping score. We got a counter.
Yes. Are we?
Every time
are we drowning?
I'm asking you, in the zeitgeist of uncertainty now, is it an opportunity? Jim Bianco was hugely optimistic about the opportunity.
So let's address both the opportunity and the uncertainty. I love the way different narratives briefly explain what's going on. They kind of come into favor, come out of favor. Hey, we're a storytelling species. We like narratives over data. That's just the human condition. So when 47 gets elected, the narrative quickly becomes, hey, tax cuts, deregulation, a business-friendly environment, and the markets take off. And then come January 20th, tariffs on, tariffs off, tariffs on, tariffs off. Random, chaotic. Listen, uncertainty is always, the world is always uncertain. Nobody really knows what the future will bring. But this sort of own goal, this sort of self-inflicted wound of random chaos, Mr. Market was very unhappy with that. And the reason we got, apparently, my hindsight bias is kicking in, apparently the reason we got this rally yesterday was, hey, maybe the tariffs are going to kind of settle in and this is negotiating. Maybe they'll be more focused and not as aggressive. Maybe it's not just going to be sort of randomly throwing darts and wherever they land, 25% tariff. And that's what the people who are concerned with uncertainty wanted to hear. The future is always inherently unknown, unknowable, but do we really need to just, make everything dependent on a roll of the dice? That's what seems to be happening over the past few days.
Is government spending out of control?
Government spending is about what it's been for the past 40 years. Now, when you have a slow leak in your tire, right, and you're supposed to have 32 pounds of air in your tire, it's not out of control if a week later it's 31 and a week later it's 30, and eventually you end up with a flat tire. I don't know where that level is in terms of government spending, but I can tell you that since I was a child, I have been promised that deficits were going to cause runaway structural inflation. No one will lend to Uncle Sam. It'll crowd out private capital. It'll collapse the dollar, like a laundry list of horribles. And it's been half a century, and none of them have come true.
So can you continue that strategy now?
I think that at a certain point, my instinct and only my best guess is at one point deficits become problematic. But you look at other functioning democracies like Japan, their ratio of debt to GDP is like triple ours. So we apparently have a way to go. That said, back to the chaos, we don't want to alienate our allies. We don't want the dollar, our exorbitant privilege, to no longer be the reserve currency. So it's possible, and I'm going to say that's a 10% chance they could screw it up, but we'll see.
In the time we got left, how not to invest right now. We brought this up with Patrick Frisetti. Right now, and it's like clockwork, every 4.23 years, institutional Wall Street decides to take a big index, think SPX, and they somehow hedge it to create a larger fee bundle, like clockwork.
Right.
This has gone on for 40 years. Describe the advantage and disadvantage and trap of being long equities but hedged, so I give up the big gain.
So, there's a difference between asset classes like the house you own and live in and stocks that you're buying because you're purchasing a future discounted cash flow. Someone tries to compare these hedged equity products as, hey, you don't complain when your house doesn't burn down. You pay for homeowners insurance. But the answer is, half of the homeowners in the country have a mortgage, and their banks say, we insist on you having homeowners insurance. And it's about 1% of the replacement value of the home. With equities, we know what the returns are going to be, more or less, over 10, 20, 30 years out. The further out you go, the more confidence we have in what you should expect. So when you're hedging your short-term holdings, what you're really saying is I'm willing to give up long-term returns in exchange for a little emotional salve.
Right.
Because the reality is stocks go up and down. That's what they do. Everybody freaking out, down 10% off all-time highs in February. Hey, down 10% happens twice every 3 years. It's not clockwork, but on average over the past 50 years, it's every 18 months. So if that's what you're trying to hedge, why bother? It turns out to not be a good use of your limited capital, and it's a giant drag on your long-term returns.
You know what I love about this, Paul?
Go.
Mark Cuban's quote.
Oh.
This is important, folks. We're all sitting around like fossils talking about this and going back to World War II. Lisa goes back before that. And what I love about what Mark Cuban says about Barry's book, all the pratfalls every investor, young or old, needs to know before they start investing. Remember that curiosity about investing, and you'd be in the HG section of the library in the Dewey Decimal System, and there'd be a book by Lou Rukeyser and
Dewey Decimal, wow.
Yes, exactly.
And all that. This is very cool, folks. I mean, how not to invest, Barry Ritholtz. And this is like what you throw at the kids and just say, just shut up, and if you get one idea out of it.
One of the questions I ask all of my guests on my podcast is, what do you know today that would have been useful when you were first starting out? And this book is my answer to myself. Here's what I wish I knew 30 years ago on that trading desk when I was an idiot newbie making every trading mistake you could and finding out from the head trader, kid, don't do that. That's really dumb.
What'd you lose money on the first time? Quickly. Mine was Westinghouse call options.
There was a guy who used to come on TV who eventually got into trouble for SEC for front running, I forgot his name, his own quote unquote stock picks. And we used to try and fade him. And it took a while before I learned how to sort of capture the top of a move. Because if you're early, it feels terribly painful.
Yes.
And if you're late, well, you miss the whole move. And that was always fun.
Barry, thank you. Barry at Ritholtz, How Not to Invest. Don't forget his acclaimed podcast as well. Look for that. Subscribe to Bloomberg Podcasts on YouTube for Joe Weisenthal, Tracy Alloway, and yes, Mr. B at Ritholtz. Red on the screen, Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. This conversation with Raphael Bostic, old news down in Atlanta. Michael McKee in from Atlanta on the Gulf Stream this morning, and he joins us right now driving all of our economics. Okay, 2014, Elif Sen at the Philadelphia Fed writes up a 3-pager on their new non-manufacturing survey. They went out, they interviewed Belchunas for the number today. I mean, that was ugly as well. How do you or Jerome Powell use something as tertiary as the Philadelphia Fed non-manufacturing survey?
When you see the number, which was a negative 32.5, down from negative 13, a big drop, and the worst level since May of 2020, when the pandemic was just getting started, you raise your eyebrow and you say, is this a signal of something? The problem is it doesn't have a long track record, and it doesn't have a huge correlation with the way the markets are going, but it does fit the pattern of what we're seeing from consumer sentiment. And in just a few minutes, we get the conference board number. CEO confidence or business owner confidence also taking a hit. And we've seen that also in the NFIB small business numbers. So overall, there's a lot of concern about there. Does it translate into action by people? That's the big question.
So I'm thinking of the University of Michigan survey, which 10 days ago really caught people's attention with its sentiment downgrade and increase of inflation expectations. We'll get an update at UMich on Friday. Does that data set have any kind of predictive ability? Because I think that got a lot of people's attention.
Not a huge amount. It's more of a contemporaneous reading. If you see consumer sentiment down, you'll usually be seeing some decline in retail sales, which is what we have seen. It doesn't necessarily tell you what people are going to do in the future. The one part of that survey that the Fed does pay attention to is inflation expectations. It's kind of the major way of measuring it that we have right now, other than the New York Fed has its own number.
And folks, if you saw Michael McKee's desk, which is just this vault of economic research, can you state now that the unemployment rate is likely trending up?
That seems to be the general consensus. Part of the reason being is we're seeing a much diminished increase in the labor supply, or at least anticipating such, because border crossings have dropped by so much. And we haven't really seen an impact yet from deportations, but that could come. But if you have fewer people in the labor force...
But isn't the soft data grim?
The soft data are kind of grim at the moment, and you see a lot of people raising their inflation forecast. Deutsche Bank out with a survey that said up to 40% odds of a recession this year. But the hard data haven't confirmed that yet, and that's what everybody's waiting for. The Fed in particular will be watching the unemployment rate, because they look at that as a good proxy for how the demand side of the economy is going.
A Bostic single takeaway quickly.
That he's grown more pessimistic about the economy, saying he's down to one cut this year. Yeah. He's nervous. But the interesting thing is, he said companies they're not doing anything, but they're also not at this point cutting back. And they think that their sales will be okay. So that's something to watch when they start telling Fed people that we're going to shut down for a while. Right. That would be a concern.
20 seconds. How's your bracket?
I didn't do one this year because my bracket is usually by this time completely useless, and it would have been again this year.
A wise man. Michael McKee, thank you so much, driving all of our economic coverage, the public service of his conversations with presidents and governors of the Fed is noted. Red and green on the screen right now. It's a battlefield out there, Paul, I say.
Yeah, absolutely. My women's bracket's better than my men's bracket. How about that?
Very good. Well, yeah, we'll have to see. All this coming up this week. What do you do when it's a battlefield? You bring out Pat. Good morning.